was positive. It's now slightly negative. A small break of 128, very briefly. 128 flat is where we are on cable. And in the bond market, yields were up by almost a basis point. Now they're unchanged at 0.67%. As I point out, Tom, I want to emphasise it's just a subtle shift in the mood music off the back of those comments from Boris Johnson, but a reminder of the difficult moment we have ahead of us as we go deeper into the end of the year.
And so much going on here. We welcome all of you on Bloomberg Television and on Bloomberg Radio, particularly across America, as you greet the Tuesday morning. Lisa, what I was thinking of, and I know you and I have been focused on this with all of Bloomberg 1130 in New York, can you imagine Mayor de Blasio and Governor Cuomo having to deal with March of 2021?
Well, they may just have to do that because the former head of the New York City Health Commission came out and actually said that New York will probably face some of the similar things that perhaps London is facing right now in the United Kingdom more broadly, which is a resurgence in cases as people hole away inside. Tom, I think the reason why we're talking so much about fiscal support is we don't know the path of the virus. It's still with us here out to March 2021 and possibly and likely beyond, I would argue. And the question is, all those restaurants you talk about, how are they going to survive? What's going to happen if people are not employed there? And how much will the economic momentum deteriorate?
Before we get to James Athey, John, I think this is the arch debate within the United Kingdom, in Germany, and much of the rest of the world. There has been true income substitution. We've had difficulty with that in the United States, haven't we?
There will be a bigger push to extend it here in the United Kingdom, that's for sure. And let's be clear right now, the United States got a grip on a COVID situation that at one point in the summer was not looking pretty whatsoever. In Europe, it's turned the other way. That's a huge 180 for a trade that many people were putting money behind, and that was that Europe was reopening in a more effective, efficient way, that the economy would recover much more quickly and perhaps have less difficulty. I think people are readdressing those thoughts this morning, Tom, just as far as the market is concerned. I think as far as this economy is concerned, we've got to think about something with some real depth and apply some real time and have some valuable conversations in the week to come. How does an economy respond when it's shocked and faces the kind of shock that it got back in March? How does an economy respond when it's shocked once again a few months after reopening? That's the conversation we've got to start having in Europe in the weeks to come.
Well, we're going to have that conversation tomorrow with the Vice Chairman of the Federal Reserve System, Richard Claret, is scheduled to be with us. I'm really looking forward to speaking to Professor Claret, particularly about the inflation vector. Right now, we come to grips with our fears as we witnessed yesterday until a huge bounce at 2:47-ish p.m. James Athey is perfect for this with Aberdeen Standard looking at long-term investment. James, how do you manage fear here? What do you do on a day-to-day tick when the fear is so evident?
Hey, morning, Tom. We would like not to be responding to any of these short-term gyrations. We'd like to be positioned in such a way that we can ride out some of these short-term storms, take medium-term views, be aware and cognizant of where some of the short-term risks lay and ensure that as best we can the portfolio is robust to deal with them. It just so happens that what's happened yesterday was fairly good for the portfolios that we're running and fairly good for the positions that we have on, because we've been very cautious about being risk-facing in this environment. It's very, very difficult on a day-to-day basis at the moment. Valuation as any kind of anchor in any kind of financial market is almost impossible because things look so stretched and extreme relative to history or fundamentals. But what we see is increasingly been a market which has ignored all incoming bad news information and embraced all incoming good news information. And when that happens, it's very difficult to point out ex ante what triggers will be. But when everybody's on one side of the boat, it doesn't really take much of a trigger, much of a wave to tip the boat over and everybody fall in. So we've been defensive, and that yesterday was the right place to be.
What does defensive look like in 2020, James?
Yeah, it's a good question. It's the world of one trade. There's, one of the banks we speak to has been calling it the world of one trade for a while, and it certainly is. Some people call it RORO, risk on, risk off. Finding diversification been very difficult. I think is interesting. The two asset classes that I mainly look at, which is core sovereign bonds, rate products, and the FX markets. sovereign bonds didn't really move yesterday. Treasuries rallied a couple of basis points. There was a lot going on in FX. I think that's been a trend recently where investors have seen bond volatility at zero, central banks trapping yields in one place, and said, well, where else can I go and express a view which might react to this stuff? So I think dollars, yen and Swiss francs are good places to put risk budget to work, where you can actually see some benefits if we do have a risk off period. But quite what your portfolio looks like obviously depends on exactly what toolkit you've got at your disposal. For us, it's definitely long duration. It's favouring the US Treasury market and it's being defensive. Short certainly MFX, short risky, short idiosyncratically weak FX, and long the current account surplus and or the flight to quality currencies.
Does that mean that you're betting on deflation?
Expressly no. Do I think there's a chance that we end up in a deflationary depression? Yeah, absolutely. I think there's a chance. I think it's very difficult. The decision tree, the probability tree of outcomes going forward is probably as tough as I've ever known, because so much is dependent on a lot of policy choices which interact with one another and which will be dictated by something as unpredictable as, for example, the virus. So really tough. I think inflation is something we just don't understand well enough to have a high conviction call, and I could see it going either way. I could see as in deflation. Equally, I could see as with really high inflation. But again, recognizing that central banks are determined at the moment, I want to position for what they're doing, not what they're trying to achieve. So for now, that means they're keeping yields low, they're crushing yields, and they're keeping that as an asymmetric bet in my opinion. So I'm not too worried about inflation near term. I think it's definitely something that may happen later.
We welcome all of you on Bloomberg Television and Bloomberg Radio. Jonathan Farrow, Lisa Bramowitz, and Tom Keene. It is a most eventful Tuesday. Huge news flow, particularly out of the United Kingdom. James Athey with us from Aberdeen Standard. James, if that's the case, and if the symmetrics and the asymmetrics are so hard to judge, what is the value or error of being in cash?
Yeah, that's go back to the start of this year and I would have said there was very little potential error. I think cash was a very attractive part of your portfolio because I just saw so many risks and I saw so little chance of the one true risk which you wouldn't want to be invested in cash for, and that's really a lot of inflation. Today, as we sit here, it's a kind of bimodal distribution. There is a good chance of very high inflation, there is a good chance of very low inflation, and cash is kind of good for one of those and not so good for the other. Again, diversification is key, even if that's diversification which isn't giving you as much and more, as an efficient a portfolio as it would have done through history. Yeah. There is still value in diversification, and I think cash is part of that. But I definitely think precious metals are a part of that today.
James, I'm going to think out loud, so go with me and forgive me for doing this. Real yields for many people have been incredibly supportive of risk assets worldwide, but real yields have been driven by inflation expectations building up and rates effectively being anchored by the Federal Reserve. What I'm trying to understand, if we reprice inflation lower and real yields actually start to go the other way for that reason, I'm just trying to get my head around this, James, what that actually means going forward for risk assets with an inflation rate or at least expected inflation coming in.
Yeah, unfortunately, it's still one big trade, but it's exactly as you describe. Essentially, we've seen break-evens widening through the period from the March lows, which is correlated almost perfectly with risk asset recovery because the Fed has been keeping nominal Treasury yields kind of anchored around 60 basis points in 10-year. That meant that real yields had to fall fairly dramatically in order to get that increase in break-even inflation. That's also correlated with the rise in precious metals, which are often thought of as an inflation hedge. It's one big trade. So if that gets unwound, what does that mean for risk assets? Well, I don't know if risk assets are the tail or the dog in that scenario. I think both is equally possible. Risk assets are up here, in my opinion, largely because central bank policy has driven them up here, not because there's some rational repricing of growth or inflation outcomes. I think break-evens are up here because they're correlated with risk assets. Therefore, if there is some shock which either forces equity prices, risk asset prices lower, or indeed pushes real yields higher, those are both going to look like the same trade being unwound. And I think pretty much everybody is in it. That could get ugly quite quickly.
James, great to catch up. As always, really good to hear from you. James Athey of Aberdeen Standard Investments. Lisa, I know on the surface of things it sounds a little bit complex and maybe a little bit intricate and far too cute, but it's something worth thinking about. If inflation expectations come in, real yields become less negative, so to speak. And I'm just wondering how the rest of the market will reprice off the back of that.
I think it's a really smart point. And if you want to take it and strip it down and make it even more simplistic, at what point does the Fed put not matter anymore because the outlook isn't good enough and it's not getting better? And that's a little bit of the fear that we saw in the market yesterday as credit spreads, the thing that actually Robert Kaplan of the Dallas Fed watches, did widen out. And you saw the biggest withdrawal from the biggest high-yield bond ETF in a number of months. This idea, even if we have these low rates, it's no longer a good enough excuse on its face to go into risk assets, John.
Lisa, I just loved what James Athey had to say there, Tom, about central banks. I'm positioned for what they're doing, not for what they're trying to achieve.
Oh, we'll have to see. We have Clarida tomorrow. That will be a most interesting conversation, hugely important.
Looking forward to that. Looking forward to that right here on Bloomberg Surveillance coming up tomorrow. Equity futures slightly negative on the S&P 500, just a little bit. On Washington up next, Isaac Boltanski of Compass Point. From New York and London, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Britain is taking major steps to stem the spread of the coronavirus. Prime Minister Boris Johnson announced new restrictions today, saying the nation has reached, quote, a perilous turning point. He asked people to work from home if possible. He also ordered pubs and restaurants to close early. The new measures are likely to last for 6 months. Face coverings will become mandatory for passengers in taxis and workers in the hospitality and retail sectors, with tougher fines for people who don't comply. Senate Republicans are moving quickly to set their strategy for confirming whoever President Trump taps to fill the vacancy on the Supreme Court. South Dakota Republican Senator John Thune says GOP leaders will likely decide today on their timing for a confirmation vote. They're hoping to get it done before Election Day. Bloomberg has learned Trump is leaning towards nominating federal appellate court Judge Amy Coney Barrett to replace Ruth Bader Ginsburg. And Turkey is accusing the European Union of, quote, rewarding the aggressor after the bloc slapped sanctions on 3 transport companies, including a Turkish firm, for violating the UN arms embargo on Libya. The Turkish shipping company operates a vessel that was at the center of a naval standoff in the Mediterranean Sea between Turkey and France. Ankara has denied that any action by the Turkish warships was hostile. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen.
And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Well, I'd much rather have a vote before the election because there's a lot of work to be done, and I'd much rather have it. We have plenty of time to do it. I mean, there's really a lot of time. So let's say I make the announcement on Saturday. There's a great deal of time before the election. That'll be up to Mitch in the Senate.
It is the number one topic, sucking the oxygen out of every other room down in Washington, D.C. And for this market to be clear, it's what they're not talking about that matters, and that's fiscal policy. From New York and London, good morning to you all. Alongside Lisa Abramitz and Tom Keene, I'm Jonathan Ferro. Here's your price action this morning. Small, mild bounce back from yesterday's price action. A move lower to kick off the trading week. We bounced back just a little bit, then roll over again. We're down 1/10% on S&P 500 futures. The Prime Minister in the UK, Boris Johnson, not helping the mood music this morning. Euro-dollar down to 117.37. I've got to say, pound sterling absolutely all over the place this morning. Cable back with a 127 handle, Tom, just south of a 128 at 127.96.
John, I'd almost call, I think you described it nicely, I'd call it flighty. I think the tape is flighty. I'd also point out the LIBOR, 3-month LIBOR, this is a benchmark foundational statistic, much more evident in the 10 years ago, the crisis period, but making a record low this morning is not to be ignored. Futures, -5. Right now in Washington, Isaac Boltansky is a wonderful policy watcher at Compass Point Research. We fold in now the uproars, plural, that we see in his Washington. Isaac, thank you so much for joining us. Is any policy discussion dead?
On the fiscal side, for right now, the simple answer is yes. Policymakers like to say that they can walk and chew gum at the same time, but in my experience, that has not been the case. And the Supreme Court developments are going to overtake the Capitol, and they will be the topic du jour, which means that the focus on the fiscal package, which was already waning, is effectively dead at the moment.
Isaac, how can people even begin to trade this, given the binary potential outcomes?
In talking to clients, I find it interesting that there is still a subset among my clients in particular who believe there's this possibility for a grand bargain at the end of the month that covers the funding deadline as well as some of the fiscal stimulus. And I think the reality is we have been conditioned over the past 10 years to expect Washington over time to eventually find its way to avoiding these fiscal cliffs. That assumption was proven wrong with these Phase 4 negotiations, which I think is a near-term concern for markets, but I think it's also going to weigh on the market's longer-term confidence in policymakers.
Well, just to sort of put a bow on this, Kevin's really talking about how this feels different than the normal Washington dysfunction. You're saying people have gotten conditioned to a lot of noise, a lot of messiness, and then for it all to come together. But from your discussions with policymakers, paired with your discussions with people in the markets, is there a disconnect? Are people too optimistic about that neat ending this time?
The simple answer is yes. There is still too much optimism regarding a fiscal package by the end of the month. My ilk in the policy world believe that Washington could come together because the simple reality is we need more fiscal support. And you don't need me to tell you that. The chairman of the Federal Reserve will testify before Congress 3 times this week, and he is going to suggest as much. And I think he's going to also make the point that the CARES Act, which was passed in March, actually worked.
Isaac, right now, at this moment, the Prime Minister of the United Kingdom, at some, I'm going to say, political peril, is saying, let's go. We're going to reset. And Isaac, to me, the headline here is he's resetting for March of 2021. Is anyone in your Washington looking out, dare I say, to March of 2021?
Not even close. We are focused on the next tweet. We are not focused on long-term policy making. And I think that this is part of the system's failure that we have seen in Washington in recent years, that there is no long-termism. And that is most clearly evidenced by the lack of focus on a fiscal package that would help us emerge from this crisis.
I mean, you were weaned in Ohio, which is a battleground state. Is any of this cluelessness going to show up at the ballot box? Does this fold in to the political calculus of mail-in ballots and November 3rd ballots?
At the moment, I think the simple answer is no. The reality for many voters is that other issues are going to animate them. And that's why I believe that the Supreme Court headlines over the past few days can be played for both bases in different ways. And so that will be what the big focus is. Now, the point I want to make here is that if the economy continues to show signs of weakness in certain corridors, that's clearly negative for the president because he is still viewed, at least in terms of the polling, as stronger on economic matters. So when we see economic weakness, it does accrue, at least in certain battleground states, to the benefit of the Biden campaign.
Isaac, just finally on the polling, the story there is that there hasn't been much of a story. For many people, they've identified the stability in the polls in many places. Do you still identify with stability, or are things changing as we get closer?
I can tell you that I think that the polls will remain stable for about another week. And most of my clients, as well as most of my contacts, have September 29th circled on their calendar. Yep. That is the first presidential debate. And I think that a lot of folks are going to get their first real feel of this campaign that night. Because up until that point, it's really just tested sound bites that have defined this campaign as we have two men yelling at each other from different states. And so to see them in the same forum is going to be meaningful for a whole lot of voters, especially those voters in battleground states who are going to decide this thing.
Isaac, from two men yelling at each other from different states to two men yelling at each other right in front of each other. Isaac Boltanski, Compass Point Research and Trading Head. Isaac, fantastic to catch up with you. Tom Keene, that debate 1 week away.
It is off the radar, and John, it's going to get on the radar real quickly. I mean, we're not going to get out front of this. My guess is the Sunday talk shows will pick it up and run with it. But, John, it is going to be something. And overnight, for our global audience, the zeitgeist on Mr. Biden is he has been very quiet relative to the Democratic Party uproar over the Supreme Court nomination to come.
Won't be able to hide from it next week. Tom Keene, just a final word on that, on debates, on the election. Your history with it going back far longer than mine, of course, for obvious reasons. I'm just thinking back to Romney versus Obama and that first debate, Tom. That first debate where Romney actually had the upper hand. And it just goes to show that you can't key off the first debate. Things can change again quick.
They can key off it, but all the rules are broken.
Can I just say...
what we saw 4 years ago, what we saw with Nixon and Kennedy, John, years ago, I had to take a nap in the afternoon so I could stay up for the debate.
I'm watching two men yell at each other from different countries.
Are you? That's good.
There's no debate about that.
Oh, me and him.
Oh, yeah.
I think it will be. See that we bring radio. Silence on radio is deadly. I would suggest, John, that the debate is underplayed right now. It's going to be a huge deal.
Actually, there was a pretty good joke from Lisa. Let's give her credit, Tom. That wasn't bad.
Thank you.
You nailed it, Lisa.
Thanks,
I never
Tom.
nail it. You nailed it.
No sarcasm.
Every morning on Bloomberg
What's good
Surveillance.
about
We'll be right here. We're here all week, Monday to Friday. I know you will love it. This is Bloomberg. Yeah, that's true.
Emotional toll on everyone here. You know, we have a lot of staff who are personally affected by the fire, you know, direct family as well as, you know, extended members. We've had people who've had to evacuate themselves. And so it's kind of balancing out the, you know, management of our critical patients with just making sure that we can stay, you know, stable ourselves. You know, this is just a lot for everyone.
Continuing to take animals in from the public and also trying to reunite owners with their animals at this location. We're not sure exactly how long we will be here, and so we're attempting to make efforts to create some infrastructure and to make a more permanent temporary shelter that can serve the residents of Jackson County for, you know, the next couple of weeks of meeting.
There is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
From London and New York, this is Bloomberg Surveillance. Good morning to you all. On this Tuesday morning, the price action shaping up as follows. After a move lower to kick off the trading week this Tuesday, we had a bounce back just briefly, then a move lower again. We're dead flat on the S&P 500. In Europe, a test after the mood music turns a little bit uglier after hearing from Prime Minister Boris Johnson on further restrictions for the British economy. In the FX market, euro dollar 117.41. And in the bond market, 0.67%, and really reflecting how busy things are elsewhere. Almost forgetting that Chairman Powell will be speaking in a couple of hours' time, Tom Keene. We'll hear from him several times this week down in D.C.
Yeah, no question about that. Again, sterling 127.99, the Prime Minister speaking tonight, a really major change in the pandemic story in the United Kingdom. Right now, arguably our most important interview of the day, folding in Fed policy from Chairman Powell, and also our conversation tomorrow with the Vice Chairman of the Fed, Richard Clarida. Diane Swank joins us, of course, so helpful typically on our Fed Day as well. Diane, I want to get to the Fed and Clarida, but I first must ask you about the economic backdrop of the battleground states of the Midwest as the presidential debate goes to Cleveland and the wonderful Case Western University. This is going to be fascinating. What's the state of the economy in Ohio and the broader Midwest?
Well, we're all suffering from the pandemic, and unemployment rates have risen quite dramatically. What most people forget is, as much as Chairman Powell emphasizes that this is a low-wage recession, this has hit disproportionately those who can bear the burden the least, it also has hit college-educated workers. And in fact, the unemployment rate is higher today for college-educated workers than it was during the Great Recession. So it is a low-wage recession, but it also has reached up into higher levels of education. And I think just the numbers are so loud, they get lost, or so large, they get lost in translation.
Diane, I've got to move forward to this important conversation with Clarida tomorrow. You know he is truly our expert on DSGE, which is a lot of fancy math. Forget the math. Let's go Latin. My first question to him will be on how a central bank acts when inflation rises. Do they get out front, or do they get behind ex post? Where is the Fed going to be? Where are they going to act if and when they get inflation to rise?
Well, clearly they don't agree on this, or they would have told us exactly what their triggers on inflation were as they shifted to forward guidance. It's still very loose. But I think what we're seeing is a Fed, it's not just the level of inflation moving up. What the Fed would like to see is that inflation get up to sort of 2.25%, 2.5% for a sustained period of time, which they've not been able to achieve. But also it's the trajectory on inflation. The Fed would not hesitate to act if all of a sudden inflation was moving up to 2.5% to 3% very rapidly. That delineation, that nuance makes this whole new overshooting aspect of the Fed's policy very hard to convey to the average American, let alone financial markets. If financial markets really absorb what the Fed was saying, they would accept that the Fed is saying, we're willing to shift the balance of bargaining power between Wall Street back to workers a bit and allow wages to rise as a share and run the economy a little hot to allow workers to have a little more bargaining power out there for a period in time. If that really set into Wall Street, we'd see a very different Wall Street today.
Diane, how divided is this FOMC right now?
You know, it's mostly in the same direction, although you've seen Bullard talk about his concerns about inflation. If they were completely unanimous in terms of what they wanted, you would not have seen two dissents. You've got Neil Kashkari at the Minneapolis Fed asking for much more overshooting than the Fed is willing to do, and Rob Kaplan saying we weren't really ready to go to full forward guidance. And clearly the chairman felt some kind of forward guidance where they commit to overshooting after the announcement at Jackson Hole was necessary. So it isn't deeply divided, but it's clearly not all on the same page. And when you're talking about overshooting on inflation, it does make a difference if you're talking about a mild overshoot or this trajectory notion. And I think this is very hard to communicate, and the noise is undermining their message.
It would be harder to communicate, just as hard, if you did have a broad consensus on the FOMC. And I'm not in the business of making up excuses for Chairman Powell in what many people felt was a bad news conference for him just the other week. But, Diana, I wonder if that goes some way, to some degree, to explain just why he couldn't answer some questions in a clear and transparent way.
Exactly. This is one of the issues that we saw, was that he couldn't say exactly what these triggers were. The Fed clearly wanted to provide more support. You can read in his early comments that he's going to give to Congress today, his testimony. He says, listen, we've done our job. It's your turn to doing your job, Congress, and we're trying to do more. Well, in expressing what the Fed is trying to do more about, he can't be clear about that. And if he can't be clear because he doesn't have a unanimous vote in the Fed and they don't have clear triggers, it makes it much harder harder to really say what this means. And we know that sort of the idea of for some time, date-based guidance does not work as well as actual numerical triggers, but they can't agree on what those triggers are.
All of this highlights the deep uncertainty about how much momentum there is in the U.S. economy and the global economy, as we haven't gotten rid of the virus yet. So let's talk about the balance of risks, because we're not going to necessarily come to some sort of conclusion on those uncertainties. Where is the balance of risk? Incurring more debt to have more fiscal support, or entering a period of a slowing economy that could potentially head back down into a further leg lower of recession?
Sadly, I worry about it being the latter. The downside risks are greater given the complete ineptitude of Congress at this point in time to act. We know that Jay Powell actually pointed out in his comments today that it was because of the support we had that we were able to get the rebounding growth we had. And now not only is it the course of the virus that determines the course of the economy, but now we don't have that support anymore, and we don't see any forthcoming. I think with your earlier guest, I agree that financial markets are very much underestimating the ability of Congress to come together, and the clock's already ticking. People are already going hungry. Food insecurity has picked up. And this really going into the holiday season when we like to gather a lot, seasonally adjusted, think about how many seasonal celebrations that we can't have this holiday season as the rate of virus cases pick up. And that's what consumers do on their own and firms do on their own. All those holiday parties that are canceled, this is going to make the 2008 cancellation of parties look like a cakewalk from a corporate standpoint, and all the kinds of entertaining that usually goes on inside of restaurants, that just can't occur to the same degree. And then that will have its own slowing effect on the U.S. economy. At the same time, you're seeing the outbreak abroad in Europe pick up and these additional lockdowns in Europe. So I think this is a very dire situation. I wish that it was better. What bothers me is that we still are going into this weakness with so many people still unemployed.
Well, you can talk about people not having parties and not consuming as much. You can also talk about if states and local governments don't get the funding from Washington that they're asking for and that they say they need, how much more could public unemployment rise? I mean, how much could we see the unemployment rate significantly increase beyond current estimates?
Now, that's really important. We already have 1.1 million down still from February on state and local government employment. That number could compound. You could easily add another 1% to 2% onto unemployment over the next 6 to 12 months as the state and local governments struggle to deal with the holes, the gaping holes in their budgets. And I think that's very important as well, because it's yet another headwind of cool temperatures and the inability to eat outside like we've seen. Yeah. And moving inside again that could exacerbate the situation.
I know it's tourism, Diane, but just what's come up in the last number of days is some really good research on what I'm going to call the goods services partition. I think we've never seen it before. Given a natural disaster like a pandemic, some states are good producing, agriculture producing, maybe they have room to breathe, and other states are service sector derived. Does the federal government have to take that into account when they try to do stimulus someday?
They certainly do. I mean, one, do you want to have enough people, enough companies still in business to be able to pick up when we can congregate again? And clearly, a vaccine alone isn't a panacea, but it gets us towards that. But that's still a year away in terms of herd immunity with a vaccine. And I think it's very important to understand the need to keep these businesses. It's an 80-year trend in discretionary spending on discretionary services that we've seen come up, that we've turned on its ear, while at the same time, you have higher income households work from home, where the idea that college educated workers aren't actually unemployed, they are, but they don't see it as viscerally as you see it with layoffs. But those households that have survived so far are buying new cars, they're buying boats, they're buying exercise equipment, they're buying a lot of goods that have kept the economy doing much better and come back much faster in some sectors than many expected. Also repairs and upgrades and second homes. That's only something certain households can afford afford. It also, we've seen in the housing market, as strong as it is, it embodies this inequality. And what we've seen in response to COVID so dramatically, where you see people buying their first homes and getting more room. Those who can afford to be able to be further from city centers do, while those who can't are stuck and now facing eviction.
And John, this timeline goes to what we've learned on this simulcast today, which is Prime Minister Johnson teaching us to look out to March of 2021. I'm sorry, that's the news item today for Global Wall Street.
See you in spring, an extended period below potential for many economies, including apparently this one, the United Kingdom. Dan, great to catch up. Really good to see you. One of my favourites, just throwing that out there. Dan Swan, Grant Thornton, Chief Economist. Dan, thank you. Looking at the headlines coming across the Bloomberg, this from Saudi Arabia. She is one of my favourites.
He nailed it.
He nailed it. She nails it every time she comes on.
Should I just get up and
to the headline? Can I get to the headline? Anytime you like. I've been pushing for that for about 4 years. The headline crossing a Bloomberg right now. Saudi Arabia floating a plan to delay a G20 summit until December, Tom. Was set to take place at the back end of November.
What do you think?
I don't know what to think. Do you know what I think, Tom? One thing that will always stay with me, back end of February when the central bankers got together in Riyadh, flying falcons. Do you know, I will never forget that. I will never, ever forget that image, the back end of February.
You
Just
did that?
Amazing.
Did you have the bird on you?
They did that.
And
they did that. That was not me doing that. That was them doing that. And I just think that we have to remember the level of complacency going into this pandemic. And I think maybe we look too much at the United States for that. There was complacency all round.
Yeah.
In every single political party, either side of the aisle, any country, not just the United States, across Europe as well. Who's learnt the lesson? I think one thing we can say is that parts of America have learned the lesson, and it's taken a long time for the United Kingdom to finally put together a plan that actually makes some sense on wearing a mask, Tom. And here we are at the end of September. From New York and London, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Senate Republicans are moving quickly to set their strategy for confirming whoever President Trump taps to fill the vacancy on the Supreme Court. South Dakota Republican Senator John Thune says GOP leaders will likely decide today on their timing for a confirmation vote. They're hoping to get it done before Election Day. Bloomberg has learned Trump is leaning towards nominating federal appellate court judge Amy Coney Barrett to replace Ruth Bader Ginsburg. Hong Kong will extend virus-related social distancing measures for another week. Hong Kong has largely contained its latest wave of the coronavirus, but CEO Carrie Lam cautions the city has to remain on guard for what she called silent transmission of the virus. The restrictions are now due to expire on October 1st, China's National Day holiday, which has typically seen pro-democracy protests in Hong Kong. An enormous wildfire burning northeast of Los Angeles is threatening more than 1,000 homes today. The Bobcat fire is one of more than 24 major blazes burning across California. 5 of the largest wildfires in state history are currently burning, and more than 5,600 square miles have been scorched. That's an area larger than the state of Connecticut. At least 23,000 California residents have been evacuated. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I think the vast majority of us can't wait until we can be back in the office again. Hopefully that occurs sometime next year. Who knows exactly what the date may be. We've got about 10-15% of our population working today in the office.
Tim Cook, the Apple CEO, I can tell you the C-suite's thinking about 2021. They haven't been complacent in many ways. In fact, Apple's shown some real leadership through much of this, closing stores, Tom Keene, before many others were thinking about it. And once again, they're thinking much deeper into the future in a way that I don't think governments have done. I'll have that conversation with Matt Hornback a little bit later this morning. Morgan Stanley's chief rate strategist. Looking forward to doing that around about 9 Eastern on Bloomberg TV.
Hugely timely as well. NASDAQ up 0.6% right now. Very much different than a flat Dow. Lisa Bramwitz and Tom Keene. And right now joining us, we're going to slide right into this because I think it's something we have underreported on and under-discussed in the recent months. And that is intangibles, including wood, plywood, plumbing, and, of course, the acclaimed granite marble top. Barry Ritholtz joins us now on A Shift to Observe. Barry, you have enjoyed the migration of about 20 miles from Southampton out to Watermill and out to the climes, the very affluent climes of the Hamptons of New York. The Hamptons of this nation are booming. We all know the reasons why. What does that signal about the future for the haves as they invest in the markets?
I think there are a couple of interesting aspects to this. And it's funny because we had a lot of work plans. We bought a fixer-upper, and we've had a lot of work planned over the past couple of years. Everything got put on hold back in February and March. And so as the contractors have started being able to do work, I'm always peppering them with questions. To me, that's the best economic research you can do. And it's shocking to find out that if you want lumber or Trex or TimberTech, any of the artificial lumber, there's an 8-week delay. If you want PVC vinyl fencing, it's 12 weeks on back order. Granite, best of luck. You could finish a whole kitchen, and you may not have the countertop or the backsplash in for months afterwards. People figured out that they're going to be stuck at home 24/7 for the foreseeable future, whether it's 6 months, 12 months, who knows? Right. And they're fixing up the place where they work, live, and play. It's one location.
But the arch question here, Barry, that is so important is that is the haves. That is a part of America literally booming in service sector and high computer value areas. How do they adapt and adjust to the horrific unemployment we see among the have-nots?
Well, that's really a question for Congress. One of the reasons we saw a partial economic recovery over the past few months that seems to be plateauing is that Congress spent $3 trillion on a stimulus. They mailed a $1,200 check out to everyone making under six figures, and they extended and increased unemployment by $600 a week. The bottom half, bottom two-thirds of the economic earners in this country, when that money comes in, they go out and spend it. The haves, they're dabbling with the granite and the sub-zero fridges.
I'm struggling to understand exactly what this means in terms of what you invest in. You invest in granite countertops. You invest perhaps in lumber futures. A lot of people have been doing that. That's been going bonkers. There's a question, though, do you invest in cyclicals? Do you invest in the rest of the economy that really is supported by the others, by the potentially have-nots, and not just the people who are building houses in the Hamptons?
It's funny, when we talk about the haves and have-nots, every sector has become a winner-take-all bit of game theory. So when you look at retail, hey, BJ's, Costco, Target, Walmart, they're all doing really well. And, of course, Amazon. The rest of the run of retailers seem to be struggling. The logistic companies that are actually overseeing the movement of goods around the country and the last mile delivery, they seem to be doing well. Home builders have snapped back. So it's very selective. It's very challenging to do a broad investment, a broad bet on the economic recovery, because it's so lumpy and unevenly distributed. And by the way, that is true whether you're talking about geographically, it's true whether you're talking about individual sectors within employment, and it's also true when you're talking about within the economic strata. The top 1 in 10%, the people who are fortunate enough to work remotely, they're doing pretty okay and spending much less than when they were going into the office on a daily basis.
I will just say that as we sit here, Barry, Tom Keene is doing some research on sub-zero backsplash with or without warming rack.
The warming rack is important.
Yeah, I see that you're really paying attention to this conversation, Tom Keene.
I am. I mean, Barry and I are looking at what to do with the next 4,000 square feet of property. Barry, we make jokes about it, but it's not funny. And, of course, we have a titanic political battle. What do you advise on allocation or ownership of cash given the immense turmoil we observe right now?
So, look, we saw what happens previously when there's a delay in elections, such as 2000. The market wobbles a little bit and then it goes on doing what it was doing previously. And we saw that post 9/11, and we saw that Pearl Harbor, JFK assassination. And I suspect even if this election takes weeks for there to be a final decision, as long as no one does anything really reckless, nobody advocates armed insurrection in the streets, which is not unthinkable, that some people will take to Twitter and say really, really stupid, irresponsible things. If we get through the month of November, the world is just going to continue on as it's going. Hopefully, by sometime next year, we have a widespread distribution of a virus, of a vaccine for the virus. Remember, these vaccines are 50, 60, 70%. The data is not conclusive that your antibodies last forever. So this might be something that we're working around for, the next 5 or 10 years. Who knows?
Well, definitely to March of 2021, based on what the Prime Minister says. Barry Ritholtz, thank you so much. Really, really interesting on the intangibles out there as well. Lisa, on this crazy day, what's your observation?
Well, coming into it, you are seeing a little bit of a reversal from yesterday, a bit of a firming up in prices, but not a comfortable one. And yesterday, we did see a bit of a sell-off in the riskier credit markets. This, to me, is really interesting. It's what people are watching, the likes of Dallas Fed President Robert Kaplan, saying this is the indication perhaps a risk-off feel is really taking hold. I'm going to be watching that today, Tom.
All right, Michael McKee speaking with Mr. Kaplan, our Kathleen Hayes speaking with Mr. Bullard, and we're thrilled. Scheduled tomorrow, the Vice Chairman of the Federal Reserve System. Of course, this after the chairman speaks today as well. I've got only one observation, and that is March of 2020. It started today, and it's stunning to begin to look out. March of 2020. That was a surveillance correction there. You see how she did that?
You know what? Honestly, it's like, understandable. It's all melding together. I'm with you, Tom.
It's so sensitive. We probably should do yoga together. Very good. March of 2021. Futures up 3. NASDAQ doing better, up 0.5% as well. Tomorrow, Clarida, a most important interview. Stay with us. This is Bloomberg Radio and Bloomberg Television.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London, for our viewers worldwide, good morning, good morning. This is the Countdown to the Open, and the Countdown to the Open starts right now. 30 minutes away, with equity futures up 2 on the S&P 500. We advance not even 0.1%, and we begin with the big issue, the market confronting two of them.
Uncertainty coming from Washington.
More restrictions across the European continent.
A lot of confusion, mixed messages out of Capitol Hill.
Uncertainty around elections.
New restrictions that we see on the COVID-19 front.
Genuine push for a much more expansive, restriction.
Risk of more severe lockdown measures.
Narrative about a delayed election outcome.
As we head towards November 3rd.
All sorts of, November 3rd. Craziness.
The recent developments around the Supreme Court.
Political turmoil.
The lockdowns are very much determining the economic trajectory.
This turmoil increases the odds of volatility.
Increased fears that this could be a difficult autumn and winter.
So increases the odds of market turmoil.
Joining us now on that market turmoil, the epicenter, Washington, D.C., is Kevin Cirilli, our Bloomberg chief Washington correspondent. Kevin, it's great to catch up with you, sir. You've said it repeatedly in the last 24 hours. The oxygen sucked out of every other room in D.C., and that means one thing for this market. Where are the fiscal talks?
I'm in the eye of the storm. Look, there's three big fronts, and as it relates to fiscal talks, the president's chief of staff, Mark Meadows, saying this morning that it is now crucial for there to be a piecemeal approach, particularly for industries like the airline industry, the airline sector. Now, top airline CEOs were at the White House last week. It comes following some intense reports coming from the the Democratic-controlled House, which have raised some concerns about some of the airline companies. But the airline industry now at the center point of these fiscal stimulus talks. The two other big issues, of course, they have to pass a continuing resolution to keep the funding for the government open, or to avert a partial government shutdown by the end of the month. They had agreed, both sides, to some type of deal at the end of last week. But now, with point number 3 coming up, the Supreme Court pick, it's unknown just where all of this leads. Now, the president has said he's going to announce that pick at the end of this week. I'm told by sources on Capitol Hill that Democrats were going to have some type of conference call earlier this morning to go over their political strategy. Meanwhile, Senate Majority Leader Mitch McConnell vowing for there to be confirmations hearings as early as next week, and he wants to have a vote as soon as possible. So a remarkable confluence of events leading to that volatility that we're seeing elsewhere playing out of Washington, D.C.
Kevin, on the Republican side, are there any concerns at all about pushing through this Supreme Court pick? Do they identify any downside whatsoever going into the election off the back of it?
Jonathan, absolutely none. I mean, they feel that voters voted them to have a control of the Senate and to have the White House for situations like this. That's what you're hearing from Leader McConnell. In contrast to that, Democrats are saying, no way, no how. It's way too close to an election for there to be some type of contentious battle. Regardless, when I talk to political strategists about the impact that this could have in battleground states like Pennsylvania, like Wisconsin, where a Reuters Ipsos poll that came out just within the last day today has Joe Biden leading President Trump. They say it could be a wash. It could activate both bases.
This is the issue for me, Kevin. Now, this is not a political opinion. I'm just identifying a key market bias, a clear one. A lot of people in this market believe if the Senate flips to Democrats, that would be a market negative. And a lot of people also simultaneously believe that if you're a vulnerable Republican in the states that you've just described, you'll be even more vulnerable because of this. Are you saying there's a lot more balance to this story than some people might suggest?
Yes, and I think you saw that even with the Kavanaugh confirmation, several, when that contentious confirmation process went through. And you've raised an incredibly smart point here, which is that markets traditionally have always done well when there's divided government. So for there to be a one party in control of both Congress as well as the executive branch, that would, based historically upon market data, that would be more volatile because divided government means certainty in the sense of it takes longer to have major structural changes enacted from a policy standpoint. And then just quickly, I would note that, we should also note that for as much as the drama that comes out of Washington, if you look back at one of the most contested elections in U.S. history in modern times in 2000, it was really the tech bubble and the tech volatility that the markets were reacting upon, and less so what was happening in Miami-Dade County.
Kevin, great to catch up, as always. Kevin Cerulli there, down in Washington, D.C., 25 minutes away from the opening bell. Here's your price action, cross-asset worldwide. Equity futures were firmer again, up 6 on the S&P 500, positive 0.2%. In the bond market, totally unchanged on a 10-year at 0.67%. We've seen some yen strength over the last week, that's for sure. A little bit of it again on the screen right now. Dollar yen down to 105, spot 55. That's the cross-asset story. Here's the market take from Matt Hornback of Morgan Stanley, identifying stimulus as the key driver to markets and running the following. The US presidential election notwithstanding, the path for US fiscal policy and its implications for the near-term future of Fed policy is the most important factor in macro markets. Matt joins us now for more. So, Matt, let's talk about it. As your assessment on the path for fiscal policy and the probability of it actually happening, has it changed in the last couple of days?
Hey, John, thanks very much for having me on. No, I mean, I think our sense of it is that, ultimately the incentives of both parties to come together for the betterment of the U.S. economy are unchanged. I mean, at the end of the day, yes, there is another contentious issue that may suck some of the oxygen out of the room when they're debating these critical issues for the election. But fiscal stimulus is still something that our economists believe is necessary to sustain economic activity. If you are both parties, why would you want to take the risk of allowing the economy to deteriorate into this election? It doesn't seem to behoove anybody because at the end of the day, the American voter might end up blaming you for not getting it done. You just don't know. So it's not clear to me why they would want to take the risk that you actually have a softening in activity going into the election. There's always going to be contentious issues that they'll debate, but this seems like one where the incentives should align. They may not.
What if you have a priority, Matt? What if you have a priority that's bigger than fiscal stimulus, a priority that could shape a country for a generation, and you think it's worth sacrificing the other issues?
Well, John, probably the reason why I'm not in Washington, D.C. is because I don't know the answers to all of these questions. But at the end of the day, from the market's perspective, I think the expectations for fiscal stimulus are all but gone from markets today, which ultimately, as an investor, you're trying to invest for a good risk-reward opportunity. And we think at this point it is a good risk-reward opportunity to play for some kind of fiscal stimulus package to come together ahead of the election. It may not happen, but I would rather bet on something that has a 10% chance of happening in the marketplace than bet on something where it's 90% already in the price. And we think most of those expectations for fiscal stimulus are now out of the markets.
So, Matt, let's talk about where you'd push this through. Would it be through treasuries with a less constructive view on the long end, or would it be through the FX market with perhaps a less constructive view on the US dollar?
Yeah, so, I mean, ultimately, we think the best way of playing this at this point is through the bond market. We are recommending that investors, really for the first time all year, we're recommending investors adopt an underweight duration position in the bond market, focusing on the very long end of the yield curve. It's the first time that we've been suggesting a short position all year. We think that this is the right opportunity to do so. On the dollar, we do think that if they can put fiscal stimulus together ahead of the election, that will weigh on the dollar. But again, there are other issues at play there as well. We clearly it's not just about fiscal stimulus, but we think that for the bond market, it just might be. So that's what we're recommending, to play it through the bond market.
Well, Matt, we were discussing the risk reward, and you talked about fiscal policy and fiscal stimulus being taken out of this market. But some people might point to the 30-year and say it's done nothing for the last 2-3 months. So why is now the right time to be short and tighten up on duration? Why is now the right time? What's changed, Matt?
Well, I mean, typically when you have a 10% correction in the S&P 500, you would have expected to see long-end yields fall further. They really haven't moved, to your point. I think that leaves me with some confidence that the risk is that they start moving higher in the coming months. But it's not just that, John. It's also about the fact that the Federal Reserve recently delivered the extent of their dovish forward guidance. In my view, it was, while it was more dovish than anything they've delivered in the past, it wasn't more dovish than what we already have in the price of the bond market today. So again, without more dovish Fed policy, I think it's going to be difficult for long-end yields to continue to move lower from here. That just helps the risk-reward skew towards higher yields.
Hey, Matt, great to catch up. Always enjoy hearing your views. Matt Hornback there of Morgan Stanley. And we will hear from the chairman of the Federal Reserve a little bit later this morning in D.C. Coming up on this programme, we turn to Europe. The UK taking steps to stem the spread of the coronavirus. BNP's Daniel Morris joining us next to discuss the potential market implications. With futures turning around, the S&P 500 up 10. We advance a third of 1%. You're watching Bloomberg TV.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I'm sorry to say that, as in Spain and France and many other countries, we've reached a perilous turning point. We will spare no effort in developing vaccines, but unless we palpably make progress, we should assume that the restrictions I have announced will remain in place for perhaps 6 months.
That was the British Prime Minister Boris Johnson saying the time to act is now after announcing new restrictions in an effort to halt the spread of the new virus cases. That's the conversation in the UK. The worry is this is just the beginning and perhaps it could spread across Europe as well. Further restrictions that we've seen from many countries across Europe too, and the United States looking gone. The mood music damaged by the words of the Prime Minister Boris Johnson just a few hours ago, and later we will hear from him once again as he addresses the people of the United Kingdom at 8 p.m. local time. Joining us now is Bloomberg's Guy Johnson for more. Good morning to you, Guy.
Good morning. The Prime Minister trying to thread a needle, John, between letting the virus rip and shutting down the economy. And this is what they've come up with. Basically, there is a reversal, another U-turn from the Johnson administration, this time on returning to the office. He's now advising people if they can work from home, they should work from home. Pubs and clubs will be closing a little earlier as well, now at 10 p.m. It's hoped that with the bulk of the transmission at the moment happening in social settings, that this will allow maybe the virus to slow down. The R number significantly above 1 at this point. The scientific advice and the medical advice is that the UK needs to take action. The impact on the economy is likely to be fairly severe. Bank of America talking about basically 2 quarters of zero growth for the UK economy, John, and with the UK likely to withdraw the furlough scheme fairly shortly, the economic impact of that is likely to be dire as well. The outlook for the UK economy certainly worsened by the action that Boris Johnson delivered. It could be worse, though, as you say, if further action is required.
A Guy, from the outside looking in, I think most people would assume that any kind of withdrawal of fiscal aid, fiscal help at this point would be the wrong move. Are you saying that still the Chancellor may actually allow the furlough programme to end next month?
As it stands at the moment, John, that is the case. The pressure is growing and the hints are coming. It may not be the case. It will be likely more targeted. It will focus on certain key sectors. But there is likely to be a change in the furlough scheme. It won't be as all-encompassing as it is now. So there will in some way be a withdrawal of stimulus, but maybe with a more targeted approach, the UK can mitigate the impact of that withdrawal. But at this point, John, that is the story still. The furlough scheme will be withdrawn, but given what has been announced today, the pressure certainly piling on the Chancellor, Rishi Sunak, to do something at this point.
Guy, politicians hate the headline with the phrase U-turn in it. But that will be the headline used by many publications across the United Kingdom, but perhaps international publications looking at what's happening in the UK. The government will tell you the data changed. The people from outside will tell you the data changed because the policy changed, and the policy wasn't coherent. The strategy had holes all through it. Have we got a coherent strategy right now? I just wonder, because as you look at things closing up at 10 p.m, you ask the question, does that make a difference, or do you need to do something about capacity in the places that they think there's a problem?
I think all of those things need to be addressed, John, yes. So we are seeing now restrictions inside, in as much as if you were to go to a pub, you would have to order from the table. Now, a lot of establishments have already been doing that. They are tightening up the restrictions around businesses and the use of face masks, particularly in places like pubs and clubs. So that is likely to come into force as well. So there will now be fines in place if staff do not deal with those details. So there is a sort of a more granular action being taken, maybe to reduce the spread of viruses within social settings. But you could argue that indoor dining, indoor drinking remains a critical risk. We've seen this around the world. There is a significant difference between inside and outside. The sun may be shining in London today, but very soon it will not be. And as a result of which, maybe further restrictions on social settings will be required, as you say.
Guy, looking forward to the programme in around about 40 minutes' time with Alex Steele, Guy Johnson and Alex coming up a little bit later as we run you through to the opening bell. Futures recovering a little bit on the S&P 500, advancing 9 points, up a third of 1%. Here's the take from BNP Paribas' Daniel Morris saying the fear of further restrictions may be overdone. He writes the following: countries will be very reluctant to impose nationwide restrictions similar to March and April because it's not obvious they were effective in the long run and because of the massive economic, psychological, ancillary healthcare costs. Dan joins us now for more. Dan, your take on what's happened in the UK and whether we face a reversal, not just in the progress we've made in the economy trying to reopen things, but also in this market as well.
Well, I think it was always clear from the start that it was going to be a challenge to find the right balance between the measures necessary to at least arrest the spread of infections and a full opening of the economy. It was always clear that there was a trade-off between the two. And I think a priori to know exactly what's going to be the right choice of policies, clearly pretty difficult. And no country, frankly, has been able to do that. So from that point of view, I think we should be a bit more understanding, perhaps, in the challenge that I think all the governments face in trying to address the effects of the pandemic and at the same time trying to keep economies as healthy as possible.
Dan, for the markets, quite clearly, one take has been that so long as we can generate positive forward momentum, the direction of travel is forward and not backwards, that's sufficient for risk assets. Do you think that's still the case? And if it is still the case, do you think we can continue to generate that forward momentum, that continued improvement?
Well, I guess it always comes down to time horizon, of course. And right now, I think we're going to be seeing an increase in restrictions. So that's going to be the marginal news for the markets. And that certainly explains part of the upset that we've been seeing, particularly in Europe, over the last couple of days. But if we try to have a slightly longer time horizon, 3 months from now, 6 months from now, I think we do believe we're going to be in a better place. You know, hopefully there will be a near prospect of having a vaccine, though, you know, unlikely that it's going to be widely available even by then. But it's going to be enough of a perspective, I think, for the markets to feel that things are going to continue to improve on the margin. So right now, it's a bit on the negative side in terms of the news that we're getting. But I think the medium-term objective of getting economies open, being able to manage the healthcare costs of the pandemic, addressing healthcare homes, having sufficient capacity for hospitals and so on is still manageable. But as always, it's going to be a bit of back and forth.
Dan, for market participants that have taken a little look at Europe over the last several months, you've heard the argument, we're both familiar with it, this idea that Europe was recovering better, handling the virus more efficiently, opening up in a more effective manner. Pile into Europe was the trade that people would come on a programme like this and big up. And I'm just wondering, Dan, from your perspective, whether it's still the right one.
Well, I think it depends also not only on time horizon, but on sectors. If you look or compare the differences in strategy to the degree you think there is a strategy in the U.S., clearly in Europe, it has been much more focused on the Kurzarbeit programs, furloughs, income support, and so on, which has clearly been beneficial in terms of domestic demand, keeping that propped up. If you look at retail sales, say, from Germany, they're actually above levels that they were at prior to the pandemic. So it certainly worked in the short term. And to some degree, equity markets, certainly German equities, had reacted quite positively to that. Our concern is perhaps a little bit more over the medium term. To the degree you're providing that support now, you're not really allowing labor markets to readjust in the way perhaps they need to. Ultimately, capital and labor both are going to need to be reallocated to those parts of the economy that are going to grow more robustly post-COVID-19. I think we all appreciate how the world has in many fundamental ways changed. So that's going to be the challenge, I think, for European equity markets over the medium term. The flip side of that is, as we've seen in the U.S., the very big increase in unemployment rates and real concerns currently, if there's no subsequent fiscal stimulus passed, that you're going to have a sharp downturn in consumer demand there. But in the medium term, you are going to have that reallocation.
Dan, good to see you this morning. Send my best to the team, won't you? Daniel Morris there. We've been prepared by. Thank you, sir. Coming up, the analyst action you need to know. That'll be next in our morning calls. And then later, JP Morgan's Jack Manley joins us at the opening bell. That is still ahead. For this market, compare and contrast where we were in the last 24 hours with where we've been in the last 3 weeks. I think it's very important to draw a distinction that this time the catalyst was different and the character of the sell-off was different as well. The catalyst, fundamental in nature. It's about policy, fiscal policy, COVID restrictions. It's about the character of the sell-off, not about the overbought tech stocks, but the embrace of the cyclicals and people's reluctance to do so given what's happened in the last couple of days. It's that conversation we'll explore in the back half of this programme. From New York and London, good morning to you all. The countdown to the Open continues. The opening bell, 7 minutes away. Equity futures up 10. We'd advance a third of 1%. You're watching Bloomberg TV.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Five minutes away from the opening bell. Equity futures positive, just about up 9 on the S&P 500. We advance 1/3 of 1%. That's the price action. Here are the morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Loop Capital, initiating coverage on Square with a buy rating, a 169 price target. The analyst seeing increased upside driven by further monetization of its Cash App. Your second call from Raymond James, raising its Apple price target to 120 with an outperform rating. The analyst citing increasing optimism surrounding its upcoming iPhone launches. That stock positive by a little more than 2%. And your third and final call comes from the team at Bernstein, upgrading Amazon to an outperform, a 3,400 price target. The analyst expecting it to increase its dominant share position once physical stores begin reopening. That stock is up by 2.25%. Decent morning for big tech. Much more on big tech up next. The latest chapter in the growth versus cyclicals debate. We do that conversation with JP Morgan's Jack Manley. Looking forward to that in just a minute's time. 4 minutes away from your market open with equity futures up 0.29%. You're watching Bloomberg TV.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Tunggu, señor.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We have a 4-day losing streak coming into Tuesday's opening bout. That opening bout 20 seconds away with equity futures up 10, called at 11 points. We advanced a third of 1%. The outperformance plain and clear for all to see. It's on the NASDAQ. NASDAQ futures up about 80. We advanced 0.75%. That's your opening bout in New York City. Switch up the board in the bond market as we await Chairman Powell. He speaks a little bit later this morning. Yields unchanged at 0.67% on a 10-year. In foreign exchange, the euro negative, euro-dollar 117.55. And crude with a lift, approaching a 40 handle, up about 1%, $39.70 is where we trade. That's your cross-asset price action this Tuesday at the market desk with your movers. Here's Abigail.
John, let's begin with an earnings winner. AutoZone shares of the used car part company, they are popping sharply higher after they put up a big fourth quarter. Adjusted earnings were beat by 23%, sales by almost 10%. Not small numbers either. Sales of greater than $4.5 billion. Not surprisingly, comps were up in a big way, up 22% versus the estimate of up 10%. One caveat, though, John, is over the last few weeks, once that $600 stimulus faded, comps faded as well to 16%. Still strong, but we do see a bit of an effect there. And we also have Advanced Auto Parts trading in sympathy. Not so much, though, for Tesla, down 4.2%. This after CEO Elon Musk has tempered expectations around Battery Day, saying that the product that will be unveiled will not be available until 2022. As you know, this stock up huge this year, despite the recent volatility, still up more than 430%. Some expectation that there was going to be a big announcement at Battery Day, a piece of that. And then Oracle giving up some of the recent gains around TikTok and the possibility of owning the TikTok U.S. assets with Walmart. And, of course, the drama goes on and the question of where the majority ownership will lie. Now, turning to the big tech, as you were talking about, John, with that NASDAQ leading the way on the day, not surprisingly, Apple, Amazon, Alphabet, and Broadcom, all a part of this, really playing into question, considering that not much has probably changed for these stocks over the last few weeks, John, suggesting that the huge rally in August, perhaps too far, too fast, with some of the downside volatility that we've seen for tech this month. A piece of that, the question is, what's next? Today, nice gains for big tech, John.
That is always the key question. Abigail, thank you. 2 minutes into the session, the S&P 500 delivering a gain of 0.4% on the NASDAQ. A little bit of outperformance there, up 0.65%. It's the story of the moment, and I can tell you the note of the last 24 hours. It comes from Morgan Stanley's Mike Wilson, warning of a second leg in the correction and writing the following. Fiscal negotiations have made little progress, and the Fed failed to appease the doves on QE. The combination means lower equity prices before the correction, led by the NASDAQ, is over. The S&P 500 and NASDAQ 100 remain vulnerable to a test of their 200-day moving averages, which are 7% and 15% lower. Bloomberg's Scarlett Fu joins us now for more. Good morning to you, Scarlett.
Good morning, John. Yeah, well, the U.S. stock market tends to be weak in September of election years, and that's exactly what we got this time around in the first 3 weeks of the month after climbing to new highs all summer. The NASDAQ 100 entered a correction down 10% from its peak earlier this month, and yesterday the S&P 500 did as well. Ever so briefly. Big tech outperformed on the way up, so they led losses on the way down. You mentioned Mike Wilson of Morgan Stanley. He is looking at technicals and positioning. Yes, the NASDAQ 100 fell below its short-term trend line, trails the S&P 500, now at risk of testing that long-term trend line. And the reason why is Mike Wilson says the declines have yet to clear out the bullishness that's been building up in the market. He cites elevated open interest in call options for Apple, for Facebook, high-flying software IPOs, including Snowflake, which doubled in its trading debut, and hedge funds that are still long tech and growth names. All that, he says, may provide fuel for this correction to go further. Still, when you look at the most influential of the big tech names, they're a pretty safe distance away from their 200-day moving average. Apple, for instance, the biggest company in the stock market, makes up 13% of the NASDAQ 100, 6.5% of the S&P, is still 30% above its long-term trend line. Amazon, 22% above. Only Alphabet is fairly close. So how does all this square up with the rotation into cyclicals and improved sentiment on some beaten-up assets, at least this month? Bloomberg opinion columnist John Authers writes about one possible theory. It may just be investors hedging the possibility that the Federal Reserve is successful in generating some inflation. But I go back to the price action and what happened yesterday, with the NASDAQ bouncing back to finish in the green and outperforming today as well, up about 0.75%. That reflects a return to caution on the economy because, once again, tech is the proven safety trade. John?
And it's improving once again today, as you point out, Scarlett. Thank you. 4 minutes into the session, up 0.7 on the NASDAQ. On the S&P 500, we advance 0.52%. JP Morgan's Jack Manley saying tech's recent pullback is just a minor bump in the road, writing the following. I continue to believe that what is happening now is a small blip on an otherwise long-term trend of outperformance. Technology has been and will remain a secular force in markets and our everyday lives. Jack Manley joins us right now. Jack, you've got to put a price on a story. Story's great. What should the price be?
Well, I don't know exactly about what the price should be, John, but I look at technology and I look at these companies and I see, as Scarlett mentioned, just how well they've performed so far this year. So even a little bit of an additional pullback, I don't think would be too disruptive. These are companies, these are names, these are sectors that have not just survived what's going on, they're actually thriving because of it. This working from home, telecommuting phenomenon that we've seen because of COVID, it is inherently tech positive. You add on top of that the fact that tech has long been a big part of our lives. I think will continue to be a big part of our lives as the devices that we wear continue to get smarter, the devices around our home continue to get smarter. I see the earnings backing up the price story, which is a critical way to differentiate what's going on now from what we saw, say, back in the tech bubble. And I continue to believe in this long-term story. I think what we saw recently is a combination of some fear in markets about macro volatility, things like the failure to enact additional stimulus, things like re-escalating trade tensions between the U.S. and China. But I also see the sell-off as being an opportunity to take some profits after an extraordinary run-up over the last several months. So, yes, I'd say it's a blip in an otherwise long-term story of outperformance. And as long-term investors, that's where we need to focus.
Jack, how important do you think the relationship is between real yields right now and growth equities?
I think the relationship between real yields and any equities is an important one. We know how low rates are at the moment. We know that inflation may be bubbling up at some point during the recovery. We also know that the Federal Reserve is probably not particularly keen on raising interest rates anytime soon. Jay Powell iterating that we likely won't see rates move above zero until at least 2023. With average inflation targeting, it could be even longer. Just remember how long it took for them to normalize after the financial crisis. We have to put our money somewhere. I think that it's inherently supportive of risk assets, and I think at the moment, growthier names are the ones that are benefiting from that.
So, Jack, let's explore that further, because what we've seen with negative real yields is actually the rate component yields incredibly stable, very anchored by the Federal Reserve as well. And as you point out, what's really depressed real yields and taken them deeper into negative territory is inflation expectations actually picking up. And Jack, what I'm trying to understand is if inflation expectations come back in, because of the restrictions we're seeing play out in places like the UK right now, and if real yields become less negative because inflation expectations are coming in, I'm trying to understand what that means for risk assets. Jack, what does that mean for risk?
It's funny to look at it because you say something is less negative. I mean, if it's less negative, it's still negative. It is unappealing at an objective level to most investors that are seeking growth or income. I suppose that on the margins, as a relative basis, it may slightly dampen enthusiasm for risk assets, but I think a near zero, whether that's slightly above or slightly below zero environment, is inherently supportive, regardless of the minutia that may happen around that zero bound.
Yeah, Jack, I'm not trying to be too cute. I'm just trying to understand, for equities, of course, it could have a disruption. I'm trying to understand where it will have the biggest disruption. If inflation expectations come back in, I guess intuitively that would mean more to cyclicals because it would have something to do with the growth outlook as well. But, Jack, if it does something with real yields, I'm trying to understand if it has a bigger impact on the growth portion of the equity market. What do you think is most vulnerable as you see things in this market right now?
Well, then in that case, I would look at those sectors that I think are particularly good at producing income for investors, because those are the ones that are probably going to get hit if real yields do start to pick up. So we're looking at some of those growthier names. Technology and healthcare they also happen to be very good at producing yield for investors. I think it may also actually dampen some enthusiasm for some of the more value-oriented names. Energy, under an enormous amount of pressure, historically was very good at returning capital to shareholders. Now, not so much because of cash flow issues, may continue to be under pressure, not just because of structural concerns, but also if real yields back up. Financials, a story that I actually am really excited about. I think they have a great tailwind coming into 2021. But again, another sector that is famous, I suppose, for paying out a very healthy dividend yield to investors. That story may be derailed a little bit if real yields, say, do back up, John.
Jack, good to see you. Always great to get your view on things. Appreciate your insight and your patience with me as well. Jack Manley there of JP Morgan. Thank you, sir. 9-10 minutes into the session, the S&P up 0.5%. The Nasdaq, where a little bit of underperformance comes through now, up 0.48%. At the market desk with your movers, here's Abigail.
John, let's start out with a big mover to the upside, absolutely soaring. In fact, GameStop is having its best day ever since going public back in 2002. This on the news that a 10% owner, Ryan Cohen, the founder of Chewy.com, has plans to make it an Amazon rival. He's planning on expanding games and also into other areas of e-commerce. There's a huge short interest on this stock, so it seems like those shorts, those bears, are taking him seriously, that there may be success. Peloton, however, also connected to Amazon, falling down 5.1% as a rival, Echelon, is developing an exercise bike with Amazon, Amazon's first exercise program. It's reputed to be less than the Peloton bike, under $500. So that stock is certainly dropping on the competition possibility. And then Vroom and Carvana higher as Goldman Sachs is upgrading them to a buy. The firm likes the shift to online buying, thinks it will continue amid this pandemic. Analyst Daniel Powell thinks these two companies, in fact, will drive more demand. And take a look at that with Carvana up 22.3%. Really pretty impressive, these new trends that we're seeing around online buying. Goldman thinking it will continue.
Abigail, thank you. Coming up on this programme, Fed Chair Jay Powell and Treasury Secretary Steve Mnuchin heading to Capitol Hill. That conversation coming up next with PIMCO's Erin Brown. Looking forward to that one. 11 minutes into the session, equities bouncing back. A small bounce, up 0.6% on the S&P. You're watching Bloomberg TV.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger
for that mixture. Growth is a way to stay competitive, delight more and more consumers.
Welcome to the best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
A testimony from Chairman Powell and Secretary Mnuchin around about 47 minutes away. Going into that, equities up 0.5% on the S&P 500, snapping a 4-day losing streak. On the Nasdaq, we advanced 0.4%. The big event on Capitol Hill just around the corner, where the Federal Reserve Chairman Jay Powell will be testifying within the next hour in a hearing likely focusing on the future of fiscal policy. The St. Louis Fed President Jim Bullard telling Bloomberg the economy has enough momentum without additional stimulus.
We still have enough in the pipeline to push us through, get the growth going in the second half of the year. I don't think there's as much of an imperative about a new fiscal package as there might have been, in July or as it might have seemed in August. I think we might be okay.
Let's bring in Bloomberg's Michael McKee for more, shall we? Mike, the chairman, many people assume, in 46 minutes' time will be telling us potentially to do more fiscal stimulus. The St. Louis Fed president is saying we might be okay. Can you reconcile the two views, Mike?
No, you can't. Jim Bullard has got his own opinion. In this case, he's more of an outlier on the Fed, as he has been in other cases, because most officials at the central bank believe that more needs to be done, including the chairman making his first of 3 appearances this week up on Capitol Hill. Jay Powell's prepared remarks are sort of a good news, bad news mix. He says economic activity has picked up from its depressed second quarter level when much of the economy was shut down to stem the virus. Many economic indicators have shown marked improvement. The bad news, both employment and overall economic activity, however, remain well below their pre-pandemic levels, and the path ahead continues to be highly uncertain. So, where do we go from here? Well, attack the disease and pass more fiscal stimulus, the Fed chair will say. The path forward will depend on keeping the virus under control and on policy actions taken at all levels of government. Powell's anticipating questions about why the Fed's lending programs haven't worked out so well. Only one municipal loan made. And the Main Street program in particular, a $600 billion facility that so far loaned only $1.5 billion. Main Street loans may not be the right solution for many companies, he says, because they can't be forgiven. Most creditworthy companies have gotten loans through their individual banks and don't need the Fed's help. So they're talking about ways they might be able to restructure. Members of Congress talking about taking some of that money back and reusing it, John. And that'll be a focus of the questioning for the next 3 days for the Fed chair.
Mike, stick with us. Just one complicating factor, of course, coming to any kind of fiscal agreement right now is the division down in Washington, D.C., fueled by what has happened on the Supreme Court and the vacancy left behind by the late Supreme Court Justice Ruth Bader Ginsburg. This headline crossed on a Bloomberg. The president says he will name a Supreme Court pick this Saturday. We heard from the White House Chief of Staff, Mark Meadows, that would be the case, now having confirmation from the president himself. Mike, communication is tough. And I'm talking about the Federal Reserve here. Now, the Federal Reserve chairman, in many people's minds, struggled in the last news conference. Do you think these little pieces of division, Bullard, Powell, the division around Kaplan, Powell, has made it difficult for him to send out one single message?
I don't really think so. I think your previous guest was mentioning this, the idea that they're just going to have lower for longer. The rest is all noise around it and how the Fed makes that happen. This Fed is determined to keep interest rates low. And even Robert Kaplan yesterday said while he disagreed with the language of the statement, he didn't disagree with the idea that interest rates are going to be at zero for 2.5 to 3 years, which is the general feeling of the members of the Fed. The case of Jim Bullard, I mean, he's right. There's a lot of money in the economy. The U.S. has put a lot out there, but that's a macroeconomic view. From a microeconomic view, there are still a lot of people who are out of work. The chairman is going to say today that there are a lot of people in the lower income areas and people of color who are really suffering and still need help.
Mike, thank you. Looking forward to the chairman's testimony around about 42 minutes away. Joining us now is Erin Brown, PIMCO Multi-Asset Strategy Portfolio Manager. Erin, always fantastic to get you on the programme. Let's talk about what you're looking for, what you're listening for from the chairman a little bit later this morning.
Yeah, well, I do believe that Chair Powell is going to spend a lot of his time really leaning into fiscal stimulus and really talking about the importance of fiscal stimulus. I think coming out of last week, what the market's really going to be looking for is more clarity with regards to their policy on interest rates. There were two major disappointments, I think, last week from the Fed meeting. The first was that there was no further discussion on asset purchases. There was some discussion or some expectation from the market that they may extend the asset purchases in terms of the duration that they're buying. The second, and perhaps more importantly, is that they just underwent a one-year framework review. And coming out of that, I think the market was expecting a little bit more with respects to their inflation targeting. And instead, we heard a little bit of more of the same out of last week. And so I think having a little bit more clarity with regards to how they think about average inflation targeting is going to be key for the market over the next couple of days in terms of what they're looking for from Chair Powell.
Erin, you and I have been talking for months now about this market through this crisis, and one thing you've pushed from the PIMCO side is the importance of policy primacy, so to speak. Do you think the policy, we're on the verge of making a mistake somewhere, if it's not on the monetary policy side, but on the fiscal policy side?
Right. Well, we've seen a lot from the Fed to date in terms of their real, leaning into this crisis and really being very proactive in terms of the response. And we did see the same from fiscal policy on the onset, earlier this year. I think now we're at a point so close to the election where the ability to get fiscal policy passed before the election, I think that window is really narrowing. We probably have 2 weeks in order to make a deal, and it doesn't seem like there's cohesion on either side in order to bring that to fruition. So I think right now the market's in a little bit of a standstill, waiting until after the election to see who wins and what can get passed. I think the market still is expecting that there will be some type of fiscal stimulus, but the window for that happening before the election is closing really rapidly. And so the expectation is that that's likely coming in 2021, which does, create a little bit of a hole between now and then in order to really continuing for economic recovery.
Erin, one thing you've noted, and I think is important, is the character of the sell-off in the last 24 hours, and compare and contrast that with the character of the sell-off in the last 3 weeks. That was about growth, tech, overbought conditions. The last 24 hours, much more than that, about fundamentals. And I'm just wondering how that reshapes how you approach your portfolio going into 2021.
Well, I do think you're right. I don't want to read too much into the last 24 hours and extrapolate that that's the new narrative for the market over the next couple of months. That said, we have come very far, very fast in terms of the economic recovery, but also the market recovery. And where we stand today, going into what is going to be a volatile next month and a half, into what's seasonally a weaker period with regards to markets, and in an environment where we're starting to see a rolling back of some of the reopening measures across the globe, most notably the UK and Europe. We've already seen it in Australia. In addition to that, cases gradually rising globally, and the standstill that we now have in Congress with regards to the continuing resolution, but more importantly, in the near term, also the fiscal stimulus bill. I think there really is some concern, in terms of the next couple of months where we go from here. I still think that risk markets are likely to continue to rally, as we get past this period of volatility. But I do think that, over the next couple of weeks, we are going to be in a little bit of a standstill because of some of these detractors that, I mentioned in markets. Going forward from here, I do continue to think that tech is still going to do well. A lot of the sort of more growth-oriented sectors that have done well thus far will continue to do well. We have started to see a little bit of the cyclical components start to gain some ground. But I really do think within cyclicals, you have to be pretty specific, because we still have certain segments of the markets which really have been constrained because of coronavirus. And I don't think you're going to see the growth come back anytime soon, at least until we have some type of vaccine for this virus.
Erin, great to catch up, as always. Always enjoy getting you on the programme. We're lucky to have you and hopefully get you back soon. Erin Brown there of PIMCO. Looking at this price action right now, we advance just 0.1%. We roll over just a little bit on the NASDAQ, now unchanged for equity markets here in the United States. Erin talking about bracing for volatility. This is a market primed for it, with the VIX curve where it's trading going out into 2021. Coming up on this programme, the market-moving events you need to be watching. That'll be next in our trading diary from New York and London. You're watching Bloomberg TV. A contentious Washington, D.C. meets a cautious Europe, and equities roll over. The S&P positive just 0.1. The NASDAQ up, not even that. That's the price action. Here's your trading diary, what you need to be watching through the week. Fed Chair Jay Powell and Treasury Secretary Stephen Mnuchin testifying before the House, 10:30 Eastern. Senate Minority Leader Chuck Schumer holding a news conference at 2:45 this afternoon. And President Donald Trump delivering remarks in Pennsylvania later this evening. Look out for all of that coming up through the week. From New York and London, that does it for us. Good morning to you all. This was the Countdown to the Open, with equities giving up the gains. This was the Countdown to the Open. Catch me on Twitter at Ferro TV. You're watching Bloomberg TV.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest-hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
That's where they are right here.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things in life happens. Yeah, I'm here by myself.
So ¿dónde vive acá? En la parte de
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a Juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty.
The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood, and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails show Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connection devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I'm currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes. The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to USA, 24 people went for the job.
23 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强，就像他的硬件，强就像他的系统建设这方面确实比你糟。但是玩信息玩软的，中国人的脑袋绝不比你们差。我们在座的所有人的脑袋绝不比你们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Value-Ag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You had a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree, global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The US was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the US commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and US states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. Turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress. And sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature. And it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when you see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. It's spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven. Get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰的。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did the sound check.
How was it?
It was tight. Hold it still glocks, but you been a bitch, suck a thick cock.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. And it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
12 in the morning, vibe
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
He said when you come for a chigga like me. That was dope.
This is lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons.
The demons told me everything they whisper in the night. This is not a threat, I promise.
Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Will. I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son. Did you guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
Bullshit, man, you can't believe it. Who the fuck you said I should quit?
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But 88 Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. Yes, please? How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs? Definitely. Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look. Hiya.
When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time.
Yeah, my love.
A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? It's good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. Written out bigger on the pod, thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came from Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとはキャラクターとしてすごくYouTube とかで検索するとたくさんの初音ミクが出てくるんですけども、元々の初音ミクのその原点は歌声を合成するソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていう存在自体がボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってくる。初音ミクらしさって僕はあんまりない。逆に初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire! It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the US government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims,
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone went to girl Superwoman? I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea. Mom, Dad, have you seen my keys? I can't find them anywhere. because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my god, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short, don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man, but then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was in his prime. And Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did. Because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along. It's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead,
a telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned even if there are swerves ahead.
Dara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers. Yeah. Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of...
Profits would help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues. that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes, because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got as sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent, and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth, and listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a brand.
Had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement at the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership. And he was held to account, right? I mean, he's no longer the CEO of the company. And he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology. But what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Jason Kelly on Bloomberg Radio.
And a very good afternoon, everyone, live from our Bloomberg Interactive Brokers studio. And I'm back at my home in New Jersey. We're also, of course, always streaming on YouTube. It is Tuesday, September 22nd, 2020, first official day of fall, and we are watching the market stocks a little bit higher as a rally in tech and retail giants, kind of tempering some of that concern over remarks from Federal Reserve officials, including Fed Chief Jay Powell, that pointed to a slow economic recovery. We're going to get to all of that in just a moment. That's our framework on this Tuesday. First up, though, let's get a check on that trading day. Here is Charlie Pellet.
Hi, thank you very much, Carol Master. Happy Tuesday. The framework higher right now, as you said, stocks paired losses after approaching the threshold that many investors consider to be a market correction. S&P 500 has come off session lows as the NASDAQ 100 climbed. Commodity and industrial shares still led the benchmark gauge to the lowest in almost 2 months. But here's where we stand. The S&P now up 24 points, up 0.7%, at 3305. The Dow is up 91, up 0.3%. NASDAQ's up 130 points, up 1.2%. 10-year yield 0.66%. We've got gold down 0.4%, 19.04 the ounce, and West Texas Intermediate crude up 0.5%, 39.52 for a barrel of WTI. Again, recapping here, S&P up 24, a gain of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie Pellet, thank you so much. All right, it is time to set the Bloomberg Business Week agenda. And with us to do that, perfect duo. Chris Condon is Federal Reserve and U.S. economy reporter at Bloomberg News. He's on the phone from Virginia. And then on the remote access in New Jersey is our own Dave Wilson, stocks editor at Bloomberg News. Chris, I want to kick it. Actually, Chris, a little technical problem, but we'll get to him in just a moment. In the meantime, let's bring in Dave Wilson to talk a little bit more about our trade, our equity trade today. Dave, Charlie giving us a rundown of the numbers, and we definitely have bounced off our lows here. What are you seeing?
Well, taking a look at the main industry groups in the S&P 500, they're mostly higher at this point. And, you look at the big tech companies inevitably when you see stocks moving up. And, yes, they're at the forefront of the gains. Even Apple now keeping pace with the S&P 500 after having fallen behind earlier in the day. I mean, you look at individual shares. Amazon certainly jumps out. It's up 4.7%.
Oh, my God.
Yeah, absolutely. I mean, the story of the day, I'm sure this is going to come up, because I know Jason's a fan of Peloton.
Yeah.
And how they're facing potential competition from Amazon, the Prime bike.
Well, listen, it's fascinating. I mean, we both have a Peloton, and, Peloton ran into some early criticism for not, kind of reaching more of the masses, if you will. They really kicked into high gear, right, during the crisis as they were able to increase online offerings and people doing, buying more bikes because they were stuck at home. They offered a lower cost offering, and yet now you've got Amazon, which, as we know, right, Dave, whenever they enter a market, whether it's dog food and pet products or baby care or you name it, it's often a category killer.
Yeah, absolutely. And they're working with one of Peloton's rivals, Echelon, according to these reports from NBC News and elsewhere. So, it's not that they're kind of going out on their own. They're bringing in expertise. So it'll be interesting to see, how this idea of getting into what they call connected fitness will pan out for Amazon. Clearly, it's being well received if the stock price is any guide. Peloton off 1.5%. It's actually kind of made up some of its losses from earlier in the day.
What else are you seeing, Dave? I mean, I know you mentioned Tesla, and Tesla's one we're going to be watching. We're going to talk about it a little bit later on in our broadcast. Yeah. It's a big investor day. They're expected to talk. They've been calling it, or we've all been calling it, the battery day, Tesla battery day, because they're expected to talk about the battery. But late yesterday, we got some news about it that put some pressure on the stock today.
Right. Elon Musk, their CEO, talking about how whatever they might be saying today about their battery technology, don't expect it to really show up in any volume in their vehicles until 2022. So it's like, thanks a lot, take away the punch bowl. But you know what really jumps out today? Selling cars online. It's huge. Carvana's up 33%. They came out and talked about how they're looking at record sales.
Right.
That, you look at an earnings gauge, they may be break even this quarter. And this is a company that, as they've gotten bigger, they've been losing more money. Sound familiar? Kind of like the early years of Amazon.
Exactly.
And Goldman Sachs came out and raised their rating as well.
Right.
And they also did it on one of Carvana's rivals, Vroom, and that stock's up 15%. Carvana up 33%. That's saying something.
That is a big boo. People are buying cars. All right, now we are connected in this virtual world and this radio world with Chris Condon. He's Federal Reserve and U.S. economy reporter at Bloomberg News. He's on the phone from Virginia. Chris, I'm so glad we connected with you because this is no doubt about it one of our major stories, market, business, economic stories on this Tuesday. That testimony, I was listening to a bunch of it this morning with Fed Chairman Jay Powell and also U.S. Treasury Secretary Steven Mnuchin before congressional lawmakers. Tell us what stood out for you.
Well, we got a very interesting variation of the way people were characterizing the economy. He had on one hand Republicans and Mnuchin talking up the fantastic recovery we have going, the speed, the very rapid reemployment of a lot of people. You had Democrats trying to talk about how awful it still was, and you had Jay Powell, chairman of the Federal Reserve, kind of in the middle, trying to say that, yes, we have made up a lot of ground, but there is a lot of ground yet to make up. He stressed that there are still 11 million people who have lost their job because of COVID, who have not gotten back to work, and that monetary policy and fiscal policy are still needed to help those people and businesses that have been very deeply affected.
And some perspective, Chris, right? I believe they noted, or the lawmakers noted, that this is more workers than were out of work after the financial crisis.
Exactly. You take that 11 million. So initially we had this big loss of 22 million.
Mm-hmm.
About half of that has been recovered, but the 11 million still out exceeds the number of jobs we lost in the Great Recession back in 2009, 2010, that time period. So yes, clearly he put it into that context to make sure people understood that while a lot of news is good, we still have so much ground to make up in terms of employment and general economic output. The levels are still quite low compared to, say, February.
Well, Jay Powell, like other Fed chiefs before him, Chris, I mean, we've seen this before where they say, whether it was Ben Bernanke during the financial crisis, whether it was Janet Yellen saying, listen, we're doing what we can do. The ball is in your court, policymakers. You are the ones who can, provide additional checks and stimulus to individuals, to small businesses, and so on.
That's right. And Powell repeated that, but I to my ear, he was not pushing very hard on that today. He used his usual lines, but he put in the caveats. He said, fiscal policy will likely be needed to provide more support. And he was very quick to say that, this is not for us to say at the Fed, but it's up to Congress to decide whether and how much to do that. He has been much more forceful in the past. If you remember, in late April, and this is importantly, after the CARES Act was already passed.
Right.
Jay Powell said, this is the time to use the great fiscal power of the U.S. That's very striking language for a Fed chair, who normally has to tread very carefully getting into fiscal territory.
Right. Right.
Now he's more on the careful side again.
Well, and I do wonder if he's becoming increasingly careful, too, ahead of the election, trying not to be political in any way and kind of just play it safe. So, hey, Chris, thank you so much. I know it was a busy morning for you, so appreciate you weighing in. Chris Condon, Federal Reserve and U.S. economy reporter at Bloomberg News, on the phone from Virginia. Check out his work at Chris Condon on Twitter. Dave Wilson, he's going to be back a little bit later on with his chart and stock of the day, stocks editor at Bloomberg News. Stick around, though. We've got quite a lineup. Bain Capital's global head of private credit, Michael Ewald, will be with us. We're also going to check in with Genpact's president and CEO, works in the IT services, all about working from home while he's in New York. His workers are in India. We're going to talk Tesla, and Abigail Disney is also back on a pact that companies need to have with their workers. Now let's get to world and national news headlines. Let's get to Nancy Lyons.
Hey, Carol. Utah Senator Mitt Romney says he does support holding a vote on the next Supreme Court nominee.
I think at this stage it's appropriate to look at the Constitution and to look at the precedent which has existed since the beginning of our country's history.
Romney says the Constitution gives the president the power to nominate and the Senate the authority to provide advice and consent on Supreme Court nominees. His decision likely clears the way for quick Senate action on President Trump's nominee. The president says he'll release his pick later in the week. Well, 10 former federal judges, including former FBI Director William Webster, are asking Senate leaders to withhold consideration of a Supreme Court nominee until after Inauguration Day. The ex-judges, appointed by both Democratic and Republican presidents, say the judicial confirmation process has become, quote, dangerously politicized. President Trump is again blaming China for the spread of coronavirus. In a virtual speech at the United Nations General Assembly today, he called on the organization to hold Beijing accountable. He also made promises about what's coming next.
We will distribute a vaccine. We will defeat the virus. We will end the pandemic. And we will enter a new era of unprecedented prosperity, cooperation, and peace.
Before President Trump spoke, Chinese President Xi Jinping took a veiled swipe at the U.S., saying no country should be allowed to do whatever it likes and be the bully or boss of the world. As for the handling of the virus, a new Pew survey across 13 countries finds 84% believe the U.S. has done a poor job. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons. You are listening to Bloomberg Business Week. I'm Carol Masser, along with Jason Kelly. He'll be along a little bit later on. But something that Jason and I talked about last week, it caught our attention. It had to do, here was the headline, I think it was in the New York Post. It talked about a New York City comedian's subway announcer spoof getting attention from an iconic voice himself. That iconic voice, by the way, happens to work here at Bloomberg. But here's a little snippet of what the comedian had to say.
Molly, hey, this is Charlie Pellet. Delighted and honored that you would choose to imitate me. It made me laugh out loud. I've got 7 words for you and your fantastic followers. Stand clear of the closing doors, please.
Okay, well, that actually wasn't the comedian. That was the iconic voice himself. That was our own Charlie Pellet. Charlie, we had to do this. This story is one that we have loved because you are so beloved at Bloomberg. But it was really funny. It was a West Village comedian. I guess he was kind of making fun of you and your announcements on the subway. Yep. Listen, we all love it. Yep. It's comforting to me when I'm on the subway. Tell us what happened.
What happened was my son, Jake, reached out. He had seen this. I was asleep. I don't follow TikTok videos. I've got, better things to watch, like cat videos on YouTube. And so what happened was he saw that. He called it to my attention after the fact, but he had reached out to her. She somehow got a hold of my Instagram account. She reached out to me. And you know what? I'm proud of what I do. I enjoy what I do. It makes people happy. She had a great line. She says, it's the voice that everybody hates when they're on the subway, but when you're not on the subway, you miss it. Anyway, she made me laugh, so I did that. The only thing I regret in the response is not saying, stand clear of the closing doors. I should have said, stand clear of the closing doors, please, and wear a mask.
And wear a mask. Well, I've got to say, I always find it comforting when I hear your voice when I'm on the trains. I haven't been on the trains in over 6 months, but nonetheless, this interaction between you two, it went viral with over 900,000 views on TikTok. That was in one afternoon. I'm sure it's well above 1 million. All right, Charlie Pellet, we love you.
My pleasure.
This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to advance with a 100-point gain right now for the Dow Jones Industrial Average, up by about 0.4%. The S&P up 26. That's a gain of 0.8%. NASDAQ up 145, higher by 1.4%. Stocks are rising as a rally in technology and retail giants tempers concern over remarks from Fed officials that point to a slow economic recovery. The 10-year 0.66%, gold down 0.4%, 19.05 the ounce, and West Texas Intermediate crude up 0.7%, 39.57 a barrel. Recapping, S&P up 27, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Certainly when it comes to COVID-19. Dr. Peter Alperin is a voice that we've reached out to before. He's vice president at Doximity. It's a professional medical network for physicians. He, too, is a doctor in private practice in San Francisco, and that's where we find him on the phone on this Tuesday. Dr. Alperin, so nice to have you here with us. I've got to ask you first, though. You're in San Francisco. We know San Francisco, between the fires, coming on the heels of the virus, it's really, really been tough. How are you? What's it like around you right now?
Well, first of all, thank you for having me. Yeah. San Francisco is doing well. It's a resilient city, and the citizens of San Francisco are really largely following all of the recommendations made by the public health departments related to COVID, including masking and social distancing. So from that perspective, things are good. And we've also been blessed with a little bit of clean air in the past few days. So the heavy, murky, dystopian images of the week before last have largely gone away. The fires are still raging, though, so we can't lose sight of that. But currently, things looking pretty good.
But I feel like both of these together, between the virus, and I think, have talked about this with you before. We've certainly talked about it with a lot of our medical guests. The virus, putting your health, individual health, front and center in terms of the healthier you are, maybe you had a better chance in terms of dealing with the virus. I think the same thing with the fires, right? In terms of climate change and the impact and the environment it creates for people. These are, health problems. I do wonder, is there a big picture takeaway from this and your organization of conversations you guys are having about changes that really just need to be happening right now?
On Doximity, we do have the incredibly great vantage point of being able to see the conversations that physicians are having. And I think that, yes, the general conversation is that there's a lot of macro issues that need to be addressed that are beyond any one single physician or single person. But at the same time, there are some common sense steps that people can take from a health perspective. And so we are continuing to, put those front and center.
Well, that's interesting too, and I was hoping to kind of tap into some of the conversations you guys are all having, because it is such a kind of an ideal platform, right, where there's things being passed back and forth. What would you like to see from whether it's local lawmakers, federal lawmakers, to kind of tackle some of these issues?
Well, I think some of the things that we'd like to see certainly is really just a more rapid and logical and comprehensive adoption of technology, as we've talked about. We recently had a report, the Doximity 2020 State of Telemedicine report, and it found that telemedicine, for instance, as a solution to be able to help more people see their physicians more easily, particularly those with chronic illnesses, is certainly something that we've seen discussed, and certainly something that we are certainly in a position to help affect. And then we're also seeing, a lot of conversations around just, more comprehensive and logical steps, from a scientific perspective on how to just keep things focused on what the science is telling us to do, and trying to, block out some of the other noise.
It's interesting. I was looking at that report. You guys did it, I believe, in 2019, and it was really all about telemedicine, which is kind of interesting to see how it feels like finally, because of the pandemic, because people didn't have a choice to go in and see their doctors, that telemedicine has taken off. What have you seen firsthand? Remind our audience what you guys have seen.
Yeah, absolutely. So what we've seen are a couple things, but the most important thing is that there is just telemedicine is here to stay. We will see roughly $29 billion in telemedicine spend this year. and which we expect to go over $100 billion by 2023. 20% of all visits this year will have been done by telemedicine, and a great number of patients will have had their first telemedicine visit. Prior to the pandemic, it was roughly 14% of patients, and then by the end of the year, we expect that to be over 50%, and those with chronic illnesses over 70%. So we're seeing this adoption widespread. It's happening, throughout the country. Interestingly, surprisingly, physicians who are not the absolute youngest demographic are the ones who seem to be adopting it a little bit more than those doctors who are fresh from training. So really just a widespread adoption, and obviously there's a number of reasons behind that, the pandemic being far and away the most important.
Yeah, it makes sense. Say those numbers again. Did you say over 50% of patients are now using telemedicine?
What I'm saying, I said that over 50% of patients will have had at least one telemedicine visit this year.
Okay, right, which is a big move forward. Do you think it sticks? Do you think it stays?
I do. I think that telemedicine is here to stay. Our telemedicine report, saw that. It was from the survey respondents as well who agree. The genie's been out of the bottle, the cat's out of the bag, whatever analogy you want to use. I think patients have found that it's a very effective way for them to be able to see their physicians. And importantly, it's for patients with chronic diseases, it's a way for them to be able to stay in touch more frequently, which is important for patients with things like diabetes, et cetera. It's not always convenient and frankly necessary to come into the office for every single visit. This is not to say that you'll never have an in-person visit, but the ability to do this is tremendously beneficial.
Right, and I do also think about the access for folks in rural areas that might not have access to healthcare, how that can solve some of this problem. We're going to continue our conversation. We're going to continue talking with Dr. Peter Alperin. He's Vice President at Doximity. He's joining us on the phone from San Francisco, so we'll get into some of that when we come back. Just a quick reminder of where we are in the markets. We heard Charlie kicking off the show, but we're up about 60 points on the Dow Jones Industrial Average, up about 22 on the S&P and the NASDAQ. We're looking at a 1.2% gain, so certainly the outperformer on a percentage basis, up 129 points. We're going to continue talking about the virus. We're going to continue talking telemedicine. We're going to come back with Dr. Alperin of Doximity. You're listening to Bloomberg Business Week. I'm Carol Massar along with Jason Kelly, and this is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, 2:31 on this Tuesday. You are listening to Bloomberg Business Week. Coming up, we're going to continue talking about the medical world with Dr. Peter Alperin. He's VP over at Doximity. It's a collection of really a professional medical network for physicians. So we'll continue talking about telemedicine, but I also want to talk to him about some of those latest virus headlines. So we'll get to that in just a moment. Back to your top business stories, and let's get another update on that trading day. Here is Charlie Powell.
All right, thank you very much. Here's what's going on, Carol Master. We are at or near session highs. Stocks have paired losses as a rebound in some tech giants tempers concern over cloudy prospects for economic stimulus and that report about suspicious transactions at global banks. Right to the numbers. S&P 500 index up 24, a gain of about 0.8%. The Dow up 87 now, have been up just about 100 a couple of minutes ago, up 0.3%. NASDAQ up 133, close to the best levels now, up 1.2%. 10-year yield 0.66%. Gold down 0.3%, 19.06 the ounce, and crude pushing higher. West Texas Intermediate up 0.6%, 39.55 for a barrel of West Texas Intermediate crude. France is reporting 10,008 new coronavirus cases today, in line with the pace of infections picking up again after a post-weekend lull yesterday. Confirmed cases rising, according to France's public health agency, but the French government saying today it is unwilling to consider a new nationwide lockdown. The COVID-19 vaccine trial designed by Pfizer and its German partner BioNTech may allow them to find whether their shot works before their fastest moving rivals. Among some of those names, among the people developing vaccines, Pfizer's up 0.5%, BioNTech shares up 0.9%, Moderna is down 0.4%, AstraZeneca, the ADRs here in the U.S., they are trading lower now by just about 1%. Well, we've got investors certainly keeping an eye on rising coronavirus hotspots around the world, as well as the nuances of U.S.-China tensions. Andrew Murtha is International Research Vice Dean and China Studies Program Head at Johns Hopkins University.
China tends to be far more comfortable when things are being done kind of quietly out of the public eye, and then announced when more or less all the T's have been crossed and all the I's have been dotted. Yeah. This is something that they're simply not used to.
He was interviewed this morning on Bloomberg Surveillance with our Tom Keene. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Recapping, S&P up 23, up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Dr. Peter Alperin, Vice President at Doximity. He joins us on the phone in San Francisco where he practices. Doximity, as I mentioned earlier, a professional medical network for physicians. So, Peter, let me ask you, we were talking about telemedicine, and I was looking at the report that you did. You guys talked about this being, I think it was an over $38 billion market last year. This year, you said, was it $29 billion?
No, well, yeah, we said that over $29 billion in actual telemedicine visits will have occurred by the end of 2020, and that we expect that to be over $100 billion by 2023.
So it's growing rapidly. I do also wonder the use of technology and wearables. How are you guys thinking about how this all ultimately comes together?
Well, the conversations that we're seeing on the platform really would indicate that, health tech is really having a tremendous uplift in terms of the people finding the utility behind it. In terms of wearables, I think it's going to be a little while before there's going to be, seamless integration of all of our devices into the same, into some magical medical record that really gathers all of these things. And that's exactly what the conversation would show. But at the same time, I think that we're seeing tremendous innovation. We're seeing a much wider adoption of these technologies. And, telemedicine is really just the first one. It's the one that helped, that we needed to get going in the beginning of the pandemic. But I think these other technologies that you're seeing are certainly going to continue to evolve and add value.
I do also wonder how it adds value in terms of the outcomes for patients. I don't know if you have examples, if you guys have done research, but, certainly I would assume a telemedicine visit is better than no visit, right? So I'm just curious how this is improving the outcome for patients.
So the study that we did wasn't designed to look at outcomes like that per se. There's other researchers who are doing that. But what we have seen is certainly a tremendous amount of reported anecdotal evidence, I guess, that you would call it, that patients are very satisfied with this and that patients are being seen. And importantly, patients are doing these visits on their mobile devices, which really can only help expand the number of people who can have access. And so I think the key thing about telemedicine is one of access, the ability for patients to see their providers. And as you alluded to earlier, the ability for patients who live in places that are perhaps without certain specialties to be able to have access to those specialties. And so that's really the direction that we see in terms of, improving outcomes.
Yeah, which is really, really important. Hey, just got a couple of minutes left here. I'd be remiss not to talk to you about some of these virus headlines. We talked about the U.S. exceeding 200,000 deaths. What are you seeing in your practice?
So here in San Francisco, we have been on the lower end of the curve. Things are continuing to get better. In our practice, we are still, seeing the occasional patient, instigated when they have been in a more of a group situation. So, not necessarily following all the social distancing. And then, of course, just the random sporadic things that happen because, there still is some baseline prevalence out there and you have to maintain and be vigilant. That's the hardest thing about this pandemic is, I think, for people is having to maintain the vigilance against something that they can't see.
No, absolutely. What are your expectations in terms of a vaccine? You watch the headlines, you read the headlines just like the rest of us. And I wonder what's your expectations here. I mean, I think many seem to think that it's like a year from now where maybe it's the closest to normal or as we get more close to normal because of a vaccine. Just quickly.
Yeah. So my knowledge on that probably is as good as anybody else's in terms of what I read. I think that we will have sort of candidate vaccines, but I think Dr. Fauci is on the money when he says we've got to make those, we've got to build those up, we've got to then distribute those and get those people vaccinated. That is a big logistical process. So I think that we're going to be for the short and medium term with the continued things that we're doing, distancing and masking.
Yeah, it's so simple, but it works, and we've certainly seen it work really, really well so far. Knock on wood. In New York City. Peter, thank you so much. Dr. Peter Alperin, he's Vice President Doximity, and of course, as we said, has a practice in San Francisco, joining us on the phone from that amazing city. All right, you're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. Coming up, we're going to dig into an interesting story that is in the magazine. It's the equality issue, and it talks about one particular city in Virginia and what it's doing with its historically black neighborhoods, trying to make things much more equal. All right, we'll get to that in just a moment. Right now, back to World and National News headlines. Right now, back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Senator Mitt Romney is backing efforts to hold a confirmation vote on a new Supreme Court justice before Inauguration Day. That makes a quick confirmation vote more likely. But Bloomberg Government's Emily Wilkins says Democrats are not making it easy.
A lot of Democrats feel that they were cheated out of not having Merrick Garland sat because McConnell said we need to leave it to voters 10 months before an election. And now they're saying, hey, this isn't fair. Republicans are, of course, saying they control the Senate, they control the president. Why wouldn't they go ahead and get this nominee through?
President Trump says he plans to name his choice to replace the late Justice Ruth Bader Ginsburg this Saturday. Federal Reserve Chair Jay Powell says the U.S. economy has a long way to go before fully recovering from the coronavirus pandemic and will need further support. During testimony before the House Financial Services Committee today, he pointed to the high number of people still looking for work.
Out of the 22 million who were laid off in the payroll numbers in March and April, still 11 million out there. And that's really good progress. We've put fully half of those back to work, but that's a long way to go. That's more people than lost their jobs during the global financial crisis.
Powell says the nation's economy largely hinges on whether we keep the virus under control. Law enforcement officials say they've arrested 179 people and seized more than $6.5 million in a worldwide crackdown on opioid traffic on the darknet. The operation mainly occurred in the U.S. and Europe. Deputy Attorney General Jeffrey Rosen says the takedown shows there will be no safe haven for drug dealing in cyberspace. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. studio. Carol Massar along with Jason Kelly, who's been running around this morning doing a great tape, or this afternoon, I should say.
Yeah, did we start at 2? We started
Hey,
at 2.
Jason. Hey, Jason. How many, do you have a watch or something?
I know.
You only have two phones that you carry around. Oh, look, those phones actually have clocks on them.
I know. I need a minder. No, I will say, deep tease. Tomorrow we're going to hear some of this. You got to tune into the Equality Summit. Conversation with Ursula Burns, of course, former chairman and CEO of Xerox, and John Winkelried, the co-CEO of TPG. It's great, if I do say so myself. Not having anything to do with me, but they really
two great voices.
Brought it, and they are incredibly passionate and specific about what needs to happen at the board level to increase diversity and representation.
Yeah, Ursula Burns is really leading a charge when it comes to that, which is really wonderful to see. And, here's someone who probably understands, she understands what it's like coming up as, a black woman. What a minority combination, in corporate America. And so she understands where there's progress, where there is not, and how things can be better. So
and she's got a plan.
Great conversation.
She's got a very ambitious plan to do it. And TPG as well. Interested to see what they have to say. So,
all right.
Anyway, that's where I was.
In the meantime, everybody's got a plan. There's lots of big pharma that's got plans in terms of bringing a vaccine to market. Pfizer's COVID vaccine trial may beat rivals to an early look. We've got a story on The Terminal by Robert Langreth. Got to read all the work that he does. And so, we're looking at, everybody's looking at who has the fastest, or who has the possibility and the best shot at bringing something to market safely, quickly, all that good stuff.
And it's an interesting story, and very much recommend people check it out because it talks about how different it is this time around in terms of how this is all getting done. We know that to be true, but this gives a lot of detail around how exactly they're doing it, and it's fast and furious for sure.
It's all about interim analyses. I'm just going to leave it there.
Yeah.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher across the board, close to session highs. The Dow, the S&P, NASDAQ all advancing on this Tuesday. Stocks paired losses as a rebound in some technology giants. Tempered concern over cloudy prospects for economic stimulus. Also that report about suspicious transactions at global banks. Here's where we stand. The S&P 500 index is up 24, a gain of 0.7%. The Dow's up 83 now, up 0.3. NASDAQ's up 130, a gain of 1.2%. 10-year yield 0.66%. Gold down 0.3%, 19.06 the ounce. And West Texas Intermediate crude up 0.7%, 39.60 a barrel on WTI. Recapping, equities advance. The S&P back above 3,300, up 23, up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So apparently nothing to see here. It's fine. Everything's fine, Carol.
We fixed it all while you were busy taping that interview.
Thank you. I appreciate it.
We're continuing that theme of that fix mode yesterday that we talked about.
Yeah.
So we just got it all done.
Listen,
go on vacation. Oh, you can't go on vacation because of the
virus. Because of the virus. Although apparently I can go back to the Virgin Islands now. It's off the quarantine list.
Nice.
Until I go again.
Yeah, exactly.
In any case. All right, let's get into one of our favorite stories in the magazine by one of our favorite writers. I love this guy's work. He's such a good dude, too.
Yep.
Caleb Melby, financial investigations reporter for Bloomberg, joining us on the phone from Brooklyn. And this is a story, it's about opportunity zones, and we've been fascinated by them. Caleb and his crew have done some incredible reporting of Virginia City's playbook for urban renewal, Move Out the Poor. So, Caleb, tell us what you found, because I got to say, I read this story and just think, man, this is tough.
Yeah, thanks for having me on. It's really thorny, and yeah, we've been covering opportunity zones a lot. And in this particular case, in Norfolk, Virginia, they've been looking at what to do with a series of neighborhoods near their downtown that are two-story public housing developments. And opportunity zones basically gave them the financing edge to finally implement kind of like a raise and replace program where these three predominantly black and very poor public housing communities will be destroyed and replaced with some mixed income, mixed use properties. Some of them will get to come back, about 1/3 in the first phase of the people who live there now, but not everyone. It's the idea, according to the city, is to decentralize poverty. And the story was a great opportunity for us to look back at the history of programs like Opportunity Zones to see how they're used by cities time and again. And it turns out a lot of times it's situations just like this one.
Yeah, and certainly important to tell as we try to understand. Joel, come on in. Joel Weber now with us after a little bit of technical difficulty, which we seem to be having in our world. Joel, tell us about why this story just really resonated with you.
Well, so this is our equality issue, and we've basically tried to look at, especially America, through a lens of not just equality but inequality. And this one, I think, has really stuck out to us for a while. And Caleb had raised his hands in the before times, if you remember those, as an area of interest that he wanted to pursue. And what was amazing with it, and why I think a story like this is so important, is because even from the before times, this is one of those topics and one of these areas of interest that still resonates. And if anything, what we've all lived through for the past 6 months and counting now only amplifies some of these disparities, and I think that's brought to light in the story. Caleb, the thing I was going to ask you about, this Norfolk specifically, more opportunity zones than any other city in Virginia, and clearly it's gone, maybe slightly awry of how opportunity zones have been conceived. But who ends up winning here?
It's an interesting question. So there is a developer the city is partnering with, Brinshore Development. They specifically specialize in exactly a project like this, public to private/public conversions. They made a name for themselves doing this with the Cabrini Green housing project in Chicago. So, like, in a very simple way, obviously, it's business for them. But the city of Norfolk would tell you that they're winning, right? That as designed, the city does not work for them, and they are going to design it in a way that is better for them. And the really painful thing about any project like this is like, then you have to ask yourself, well, who is the city? And are the people who are leaving, are they part of the city? And that's something people in this community called St. Paul's are grappling with, and what the politicians have been trying to grapple with in town as well.
Well, and Caleb, I do think about the body of work that you guys have put together here. And, we've had Opportunity Zone investors on this program, and we've seen it up close and personal here in New York City. I guess I come back to, and this is building on Joel's question, is this, kind of people just kind of being, pardon the pun, opportunistic about a law that kind of allows them to sort of make money even though it's not in the spirit of the law, or is this bad law?
Well, that's a really great question, and you're right. There's investors here too. I neglected to mention those here on Bloomberg Radio.
Go figure.
Yeah, no, you're exactly right. Look, opportunity zones were specifically designed to have very few, basically non-existent guardrails, because other programs, enterprise zones and empowerment zones in the 90s, had a lot of them. And investors and local leaders complained that, like, they couldn't make matches work because it was too restrictive. So opportunity zones were specifically incredibly expansive, with a generous capital gains tax break and no real particular rules about, like, what exactly you had to build with those investment dollars, so long as it was going into these communities. So yeah, our reporting is focused a lot on some what may be outliers, right? We don't know because there's no actual public disclosure for the program. So we actually can't measure in any way whether all of the opportunity zone money looks like Norfolk, or looks like, say, New York, which we reported on before, or if there's some more, like, kind of locally minded investing dollars going in as well, because there's no reports from the Treasury Department one way or the other on that.
Yeah, transparency would be nice here.
Caleb, I want to bring it back to Caleb, I want to bring it back to the people that this affects, who are effectively being pushed out of their homes. From your reporting, what did you gather? What are their options, and where are they going to go?
Right. So basically, the city is helping them get onto voucher programs, Section 8, and similar. So they'll have to take those, even for those who have a ticket to come back to the new place, they're going to have to take those onto the private market to try to secure housing in the interim. And a lot of landlords, even though it's against the law, are not excited about taking on Section 8 tenants, and often avoid doing so. It's also very easy to lose your voucher if you can't find a home in the right amount of time, or if you fail to pay your utilities. And for a lot of people who maybe have been living in public housing for some time, those are new tasks that can be a challenge if you lose a job or similar.
It's a great story, and as Joel mentioned, it's the equality issue of the magazine, so highly recommend that you read it so you can get kind of all of the accounts that Caleb and Joel talked about. It's really a great read. Hey, Caleb, thank you so much. Bloomberg News financial investigations reporter Caleb Melby, along with Bloomberg Businessweek editor Joel Weber.
And for those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg Businessweek continues right here. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next. Coming up with us next, Peter Atwater. He's one of our favorite economists. He's amazing. The K-shaped recovery. We're going to dig into it. Stay tuned. It's Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, September 22nd. The Dow, the S&P, and NASDAQ are all advancing as a rebound in some tech giants tempers concern over cloudy prospects for economic stimulus and that report about suspicious transactions at global banks. Here's where we stand right now among some of those technology names. Apple is up 0.7%, Microsoft up 1.6%, Facebook up now by 1.9%. The S&P is up 21, close to session highs, up 0.7%. The Dow up 62, off session highs, up 0.2%. NASDAQ now up 120 points, higher by just about 0.1%. After the bell, we will be hearing from Nike. Nike shares, they're advancing now by 2.8%. The 10-year yield 0.66%. Gold is down $8 the ounce at $19.04, lower by 0.4%. And crude up 0.7%. West Texas Intermediate crude $39.60 a barrel on WTI. Fed Chair Jay Powell says the U.S. economy's got a long way to go before fully recovering from the coronavirus pandemic and will need further support. In virtual comments to the House Financial Services Committee carried live here on Bloomberg Radio, Powell said, quote, "The path forward will depend on keeping the virus under control and on policy actions taken at all levels of government. Investors are keeping an eye open for any movement on stimulus discussions. Isaac Boltanski is Senior Policy Analyst at Compass Point Securities.
Policymakers like to say that they can walk and chew gum at the same time, but in my experience, that has not been the case. And the Supreme Court developments are going to overtake the Capitol, and they will be the topic du jour, which means that the focus on the fiscal package, which was already waning, is effectively dead at the moment.
Amazon has launched a Prime bike in a bid to compete with an array of at-home exercise bikes which have become popular in the pandemic. Amazon shares up right now by 4.6%, Peloton down by 1.2%. S&P up 0.7. Charlie Pellet, Bloomberg Radio.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed. Jason Kelly, Carol Masser here. We have talked with our next guest before, covered his perspective on what kind of recovery we are having, And something he's credited for coining is a K-shaped recovery, where things are fine for some, not so for those. And those that are not faring so well often are the have-nots already in our world. He's back in today's Business Week Economics. Peter Atwater is adjunct professor of economics over at William & Mary. He's now also talking about the age of illusion and the rise of another age, which he will get into. He joins us on the phone from Pennsylvania. Hey, Peter, great to have you back with us.
Thank you, Carol. Great to be back with the two of you.
So talk to us a little bit. First, I've got to ask you, I don't know how closely you followed Jay Powell today, but I do wonder, I just got to touch on, your K-shaped recovery, because as we talked with you before, it just so really describes this world that we're in. Do you feel like it just becomes even increasingly more of a K-shape based on kind of what we're seeing right now?
I do. It's very frustrating, the fiscal stimulus that we would need to help those who are at the low end of the economy is not forthcoming. And yet we continue to see support from a top-down perspective, which, monetary support enabling those who are already well off. And I find it a little disingenuous to hear policymakers who rely on top-down, activity like the Fed being sort of skirting around the issue of inequity, because I think of it almost as sort of an oxygen mask strategy, where they put the masks on the adult first, expecting that the mask will be passed to the children and then those further down. But in a world of maximizing shareholder value, a lot gets diverted and doesn't trickle down.
Peter, we have increasingly seen what feels like a very fragile market. And if it's a recovery that we're in, it just it feels like it could just it's gossamer. It could just disappear at any moment. Why do you think that is, and how do we adjust to it?
Well, I think that I think some of it is people are so isolated and self-isolating that nobody has a really good feel for what's happening out in the real world. So it enables people to fantasize about what might be. And I think that level of uncertainty has people very, very tentative. I mean, the focus on real-time economic information, people are tracking things by the day. And I think that some of it, too, is that this has been a cycle that has been filled with lots of banter and lots of, what I refer to as illusion. There's been a lot of promotion. We're going to blitz scale, make things enormous in size. And that tends to lead to some fragility.
Yeah, exactly. It's interesting, as you said, I was thinking about, kind of real-time economics, and I was in the office yesterday and just walking around a little bit in New York and just amazed at the storefronts that have gone out of business. And it made me think, okay, it's not just a business, it's people behind that, whether it was the owner of the business, the people who work there. And I'm talking about small and big companies. So it makes me wonder about kind of where we're headed. Having said that, I want to get into what you've been writing about as well. And you talk about the age of illusion, and you talk about the rise of the age of scrutiny. And scrutiny is spelled SCREWTINY. Talk to me a little bit about this.
Sure. So, as I said, this cycle was born out of despair. And one of the things we know from history, if you go back and look, for example, in the mid-1800s, or you'll see that was the era of P.T. Barnum. So not surprising, we've had the Greatest Showman movie and this whole culture of showmanship in business, in finance, in politics. And I think a lot of it has to do with spectacle. And one of the challenges of spectacle is trying to maintain momentum. The two-headed lady has to become a three-headed lady, has to become a 5, 10. It's got to be bigger and bolder. And you see that in terms of capital being deployed. It's not enough to raise a SPAC that's got $100 million. It's got to be $500 million. It's got to be $1 billion. Everything is sort of supersized in this environment, and it's hard to then fulfill that. Yeah. And so I think of this as being, there's a lot of illusion out there of what might be. And this week we saw the danger when illusion is challenged, and so easily challenged, as we saw with Nikola and the truck. Did it drive itself? Did it get pushed down the hill? And suddenly you see the skepticism. And illusion is binary. Either the magic works or it doesn't.
So when you talk about this, so I think about our audience, these are informed people in business, in the financial markets, in the world at large, leaders. Just got about a minute left here. Why is it that you think this is important, that they're aware of this?
Because illusion, other than on the magician's stage, is deception. And so we have to be careful that we don't end up in a situation where people really question, is this real?
Right. No, I mean, it feels like we've lost the handle in some ways, and we've sort of, in this topsy-turvy world, lost our bearings, and that's absolutely great insights there. Peter Atwater, thank you so much. Great to catch up with you, adjunct professor of economics at William & Mary, joining us on the phone from Pennsylvania. Carol.
Listen, I feel like, this is a time, and I think we're having those conversations certainly on our Bloomberg Live platform and elsewhere, and certainly on our air. We need to have these deep conversations and figure out things because of the stresses that we're facing. We are seeing disruption, innovation, which will hopefully get us to a better place, but there are some systemic problems that have to be dealt with. They're not new, but it's time that we stop talking and actually do something, and figure it all out.
Absolutely. All right. We will continue our conversations about economics. We're going to talk about small businesses as well, something you alluded to in that conversation, Carol. First, let's get down to D.C. and Nancy Lyons. Hey, Nancy.
Hey, Jason. President Trump is hitting China again over the global coronavirus pandemic. And in a virtual address to the United Nations, he urged action.
We must hold accountable the nation which unleashed this plague onto the world, China.
The U.S. coronavirus death toll today passed 200,000, with more than 6.8 million confirmed cases. The president defends his administration's response, calling it the most aggressive mobilization since World War II. Well, the CDC is putting out new COVID-19 guidance for the upcoming holiday season. Bloomberg's Nathan Hager has more from Washington.
The CDC says traditional celebrations like Halloween trick-or-treating, Thanksgiving parades, and Black Friday shopping sprees should be avoided. Instead, it's recommending alternatives like virtual Halloween costume contests, small dinners for household members, and online shopping. The CDC says if people do gather in person for Christmas or other holidays, they should do so outdoors, keep their groups small, wear masks, social distance, and keep in mind where their guests are coming from in case they're COVID hotspots. In Washington, I'm Nathan Hager, Bloomberg Radio.
A public affairs aide at the National Institute of Allergy and Infectious Diseases plans to retire after the Daily Beast reported an extensive derogatory comments he made toward the agency and its director, Dr. Anthony Fauci. Bill Cruz made the comments as an editor of the popular conservative website Red State. The Institute confirms that Cruz has confirmed his retirement but did not make any further comments. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right. This one's in our sweet spot.
It's like everything that we like. It's like our world coming together.
I know.
I heard this morning and I was like, what?
Yeah.
So Amazon, Dave talked about it at the top of our broadcast and he said, man, he was thinking about you big time. So Amazon launching a Prime bike. Love the name, I think. Launching it today. And man, they're going after Peloton Interactive big time.
They are. And what's interesting is there's another company that's involved in this. It's called Echelon Fitness, private equity backed. North Castle Partners is the main investor there. They've got a long history in fitness. They have been known as a cheaper Peloton. I mean, if you go to their website.
Was this the one that was when you saw it, you're like, look at this. It's like total knockoff.
Yeah, totally. It is. I mean, there's no denying it. There's really no differentiation other than this is cheaper.
But even the promo, right? Like everything, the website, you were like, wait, is this Bizarro World?
There have been lawsuits. There have been all sorts of things. But Echelon doing this deal, it's a partnership to create the Prime bike. And you get a 30-day Echelon membership trial. It's a $500 bike. Now, keep in mind, a Peloton, even the sort of quote-unquote cheaper Peloton now is more like $1,800. Now, you can finance it, and there are all these different things you can do. But this is massive, massive news in the at-home fitness market.
Yeah, absolutely. And investors taking note, Peloton, now keep in mind at its lows today was down about 6.7%. It's now down only about 1.5%. So it's recovered. Amazon is up 4.6%. And for a little bit more perspective, Peloton is up about 229% this year. I mean, it has taken off because you saw more people buying bikes, tapping into their online world as well because of the pandemic.
And there is an argument that these are ultimately two different markets, candidly. There's a lower end and a higher end. There's an Android Apple argument here. Like, there's all sorts of things, and we'll continue to analyze it. I promise you, this is not the last time we're going to be talking about this. That's for sure.
No, exactly. There's a lot more to come. So anyway, stay tuned. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sharp contrast to this time yesterday with the Dow, the S&P, and NASDAQ all advancing right now. S&P is up by 0.8%. We have got the Dow Jones Industrial Average up by 93 points for the Dow. That is an advance right now of 0.3%, while the NASDAQ Composite Index up 137 points. For NASDAQ, that is a gain there of just about 1.3%. Stocks are higher as dip buyers emerge after the market sell-off, tempering concern over remarks from Fed officials that point to a slow economic recovery. Most groups in the S&P 500 advancing, retailers, real estate companies leading today's gains. 10-year down 1/32 now with a yield of 0.66%. Gold down 0.5%, 19.02 the ounce, and crude West Texas Intermediate up 0.7%, 39.60 for a barrel of WTI. Among the companies reporting earnings after the close of trading today, Nike will be all over those numbers as they break. Nike shares up now by 2.9%. Again, recapping equities higher, close to session highs. S&P up 26 now, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, let's dig into our Bloomberg Business Week Small Business Survival Guide. As Carol alluded to in our conversation with Peter Atwater, the small business economy, man, it is just brutal out there. And as we contemplate a second wave, I think we worry even more about that, especially in the absence of more government stimulus coming. Nick Leiber has been following this very closely. He's a contributor to Bloomberg Business Week. He joins us on the phone. So this isn't just a on our blocks sort of situation, Nick. This extends all over the country. Tell us about what's going on in Maine.
In Maine, I was speaking with the owner of a very cool coffee shop. I think it was rated one of the best coffee shops in America by Food and Wine last year. And, you know, when businesses had to temporarily close in Maine, non-essential businesses, this coffee shop, of course, closed for a few months. And then when the owner tried to negotiate his lease, trying to see it as a partnership, didn't really make much headway with his landlord, and ultimately decided he would have to close because he just wouldn't be able to make rent because he didn't have enough business coming in. And that's something that, you know, is happening in Maine and happening in many different states.
So what happened to him?
Well, he with the help of his lawyer, he, tried to negotiate, tried to craft a letter, tried to treat it as a partnership, but ultimately realized, okay, I'm not going to be able to pay the rent. I'm going to pull the plug. This coffee shop is no longer going to exist. These employees who I try to pay fairly, I'm no longer going to be able to employ them. This place that I've spent, many hours and tens of thousands of dollars fixing up, is just going to have to close. And he was about ready to close. And then I think his sister happened to see a sign in downtown Portland, Maine.
So, Nick, hold that thought, because we have the man himself to tell us the end of the story. Andrew Zarro, he is the owner of Little Woodford's Coffee Shop, the aforementioned, very cool, one of the best rated coffee shops in the country. So, Andrew, what's the end of this story?
Hi, I'm sorry that I called in late. I guess the good news of the story is that we're doing all right. We're going to be okay. With a little bit of resiliency and hard work, and those, economies of intimacy, knowing folks in our community who are looking out for us. Our shop has been successfully in its new location for almost 3 months, and we're just getting ready for a New England winter.
Well, but
whatever that's going to look like.
But Andrew, you had to your past landlord wouldn't renegotiate your lease, so you had to find a new place. Right. Amid all this that's going on, amid all this uncertainty, they wouldn't play ball.
Correct. Yeah, and it wasn't for lack of trying. I mean, we did everything. My attorney quickly became my therapist and my friend because
you don't know what's coming around the next corner because of the pandemic, and all you want to do is keep your employees employed. We had been closed for 2 full months and then reopened once we got the second round of PPP funding, and then the next day to hear it's just not going to happen. That's one of those heart in throat moments that you never forget. It was terrifying. I don't wish it on anyone.
And so talk to us about the community aspect to this, because I do feel like we are starting on a happier note to sort of really hear about communities rallying around. Tell us about your experience that you alluded to, this notion of people really rallying around you.
Yeah, I mean, that's a huge part of my business. So we opened 5-minute walk from my home, and that was one of the appealing parts of leaving my public sector job to open a small business was community, engaging and investing in my local community. And we live in a place where, folks crave that. A coffee shop is a third place. So when you're not at home and you're not at work, you're there. You're in your third place, whatever it is. So people responded to this. It was just so overwhelming. Right. We did a GoFundMe for the first month, and we almost, tripled that. And I was able to give the extra to my employees to help them when we were closed. And then when we announced we had to move, every single day, the shop is now downtown, so nowhere near where it was. But our regulars are still coming every single day, which is very heartwarming for me.
Yeah, and listen, this story by Nick and, actually just attributed to you, Andrew, that you recommend that if you've got issues that other small business owners talk about them with other business owners, and even if it doesn't work out for you, at least, there is power in numbers, and it might prevent landlords from being tough on others. So really great to check in with you. Check out more stories from the Small Business Survival Guide. They're at Bloomberg.com. And so really good. Nick's got another story, too, about what's going on in terms of landlords and the pressure that they're putting on small businesses. And we know small business, so important to the U.S. economy. So our thanks to both of them. Nick Leiber, Bloomberg Business Week contributor. He wrote about this. And, of course, Andrew Czar, owner of the Little Woodford's Coffee Shop in Maine. I just kind of want to go there. I love Maine. I just want to go there.
I just want a nice cup of coffee.
In general?
I don't even need to go to Maine. I would just like a really nice cup of coffee.
But just think about if we could, how sweet that would be.
Oh, yeah. A nice remote from a Maine coffee shop. New location.
I'm in.
All right. Coming up, chart of the day, and we're going to get you to the close of trading. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's already 3:30 on Wall Street.
It is indeed, which means the chart of the day is coming up. Can't wait.
Yeah.
Jam out.
Jam out.
Yeah. See what it was rocking yesterday.
Yeah, it totally was.
I think you and I, whatever hair I had left was blown back.
Let's see if he's going to slow it down a little bit.
Take it down a notch.
Take it down a notch.
Dave Wilson taking it
for
down
all you,
a notch.
lovers
all you
out
lovers
there.
out there, lovers of charts. Anyway, we're going to get to that in just a minute, but first, let's get back to the headlines. Charlie Pellet.
I'm thinking keep it going between the two of you. Who am I to interrupt? Here's what's going on. We've got the Dow, the S&P, NASDAQ close to or at best level of the day. 28 minutes to go ahead of that closing bell. Stocks bearing losses as a rebound in some tech giants tempers concern over cloudy prospects for economic stimulus. Also a report about suspicious transactions at global banks. Right now we have got the Dow, the S&P, and NASDAQ also higher. Got to mention Nike, by the way. We get that after the closing bell. Nike pushing higher now by just about 3.1%. The Dow up 130 points. That is a gain of 0.5%. Your S&P up 30, higher by 0.9. NASDAQ up 157, up 1.5%. 10 years down 132nd right now with a yield of 0.67%. Gold down 0.6%. 19.01 the ounce. West Texas Intermediate crude up 0.7, 39.64 a barrel of West Texas Intermediate crude oil. The COVID-19 vaccine trial designed by Pfizer and its German partner BioNTech may allow them to find whether their shots work before their fastest-moving rivals. The companies plan a first look at a mere 32 coronavirus infections that have accumulated in their massive 44,000 personal trial. Among some of those biotech shares today, Pfizer is advancing by 0.4%, BioNTech up 0.9%, but Moderna is down 1.4%. AstraZeneca, the ADRs traded here in the U.S., they are down now by about 0.8%. Investors certainly keeping an eye on rising coronavirus hotspots around the world, as well as the nuances of U.S.-China trade tensions. Andrew Murtha is International Research Vice Dean and head of the China Studies Program at Johns Hopkins University.
They, like everybody else, are watching to see what happens in the United States in November. And one of China's, I think, chief sources of international leverage, that is its ability to interact with and invest in much of the developing world, has now been complicated by COVID, as well as these other kind of international trends that we're seeing.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, recapping here, equities higher, S&P just about close to the best level of the day, up 0.9%. I'm Charlie Pellet. That is your Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week.
Watch me spin, skin and bones, skin and bones, skin and bones, don't you know?
All right, he did take it down a notch. That is not hair metal. Skin and Bones. I believe you are Googling right now to try and figure out what it is.
Cage the elephant?
Nope.
It almost sounds like the Shins, but I don't think it is.
You're getting closer.
Who is it?
No.
Wait. I can't find it. Sorry, that was really high pitched.
That was. Wow.
All the dogs in the neighborhood are at alert.
I'm a little.
Foo Fighters? Is it Foo Fighters?
Right, Carol. You didn't know that. You Googled.
I am crushed, David Wilson. Yeah, I didn't know
The
that.
Foo Fighters.
There's
Okay,
a lot
I hear it now.
Can I
hear
tell
it
you?
now.
You do Skin and Bones, and there's like a million things that come up.
Yeah.
I believe it.
Yeah. Okay, so.
I love the Foo Fighters.
What?
You know, there's speaking of
You love
Peloton.
them so well, you couldn't pick out Dave Grohl's voice. Okay, Jason.
Well, you know, I
He's
love talking about the
adorable, by
Foo
the
Fighters,
way.
I should
He's
say.
adorable.
Dave Wilson, there's a Peloton instructor, speaking of Peloton, says there are two types of people who love the Foo Fighters and liars.
That's good.
That's like,
Dave Grohl
can
would
I
be
just
so
tell
pleased.
you, to really take it down a million notches, it's like people who say, I'm not going to go there.
All right. In any case, Skin and Bones.
Yeah, I mean, when you have a chart that's all about weightings, why not skin and bones? I mean, you could argue that the financial and energy stocks in the S&P 500 are looking like skin and bones these days when you compare them with technology shares. And, you got to remember that back in the 80s, energy dominated the S&P 500. And in the 90s, finance had the same role. These days, though, very different story. And actually, the gap between finance and energy taken together and the S&P 500 technology index's weight, 17 percentage points this month. That's the gap, the biggest one that we've seen. And that's about as big as we saw back in 2000 when tech stocks were peaking. There's one little adjustment, though, you have to make to really get a sense of it. You have to remember, a couple of years ago, right, there were a number of companies like Facebook, like Google's owner Alphabet, a few others that were taken out of the S&P 500 technology index and reassigned to communication services. And when that happened, you saw the ratio, or I should say the spread, you could say, between the energy and finance together and technology. I mean, it came up like 5 percentage points in a day. So in other words, if you looked at that 17-point gap you had now and made the adjustment for what happened 2 years ago, it'd be more like 22 points. So in other words, you'd be far below in terms of the combined weight of finance and energy where you were relative to technology 20 years ago. I mean, it just goes to show you how insignificant, arguably, those two groups have become in relative terms and how much, if you turn it on its head, tech is really dominating the landscape when it comes to the S&P 500. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
You said David Grohl, right? You said what he did with that little competition with that 10-year-old, the drummer. Did you see that?
I did.
It's cute. It was just so endearing.
And actually, that's the same 10-year-old who got a guitar from Tom Morello of Rage Against the Machine after a similar sort of video episode.
So this girl is just really smart and knows how to work.
Yeah.
And knows how to work online. I
Very,
mean, I'm
very
just saying.
savvy. It's an influencer, little influencer.
It's just
a British girl.
I love it.
There you
I
go.
kind of love it.
All right, Dave Wilson, thank you so much. We will check in with you after the close of trading for your stock of the day. Carol Masser.
Yeah.
Good Googling, by the way. Well done.
I was
like you have Shazam fingers.
I was struggling. And then like a bunch of stuff came up and I'm like, oh, now where do I go?
Then you started squealing. I mean, that took a turn.
The dogs are
Hannah
down.
Corbin. Have you ever taken any of her classes on Peloton?
I love her, actually.
She's the
I've got a girl crush on her.
Yeah. She's the Foo Fighters. That's her Foo Fighters quote.
She was the one that kind of crushed me when she's like, oh, yeah, growing up, my mom played Madonna.
Yeah, I know.
And she did an homage in honor of her mom.
Those kids.
It hurt a little bit.
All right, let's head down to Nancy Lyons for some world and national headlines. Hey, Nance.
Hey, Jason, a grim milestone today as the U.S. surpasses 200,000 lives lost to coronavirus. 20,000 U.S. flags are flying near the Washington Memorial, marking the lives lost. That's 200,000. House Speaker Nancy Pelosi calling those deaths a tragedy.
This was preventable. Not all of it, but much of it. And what could be lost in the future is preventable too, if we embrace science.
Democrats and Republicans have not given up on preventing a government shutdown on October 1st. Maryland Congressman Steny Hoyer says he's hopeful the House might be able to vote on a stopgap spending bill tonight. Speaker Pelosi and her Democratic colleagues yesterday released a bill extending most funding to December 11th, but it lacked the $30 billion to support and protect farm income that was sought by Republicans. The Justice Department says it's busted a massive drug ring operating on the dark net. In addition to seizing 500 kilos of drugs, they also found more than $6.5 million in both cash and virtual currencies. FBI Director Christopher Wray applauds the work of his agents.
Every day, they're working to show these criminals that they can no longer count on hiding on the darknet, because we're going to infiltrate their networks, shut down their online illicit marketplaces, and bring them to justice no matter what it takes.
He says the operation covered 7 countries with 120 arrests from activities here in the U.S. NASA is announcing new plans that would land the first woman and the next man on the moon by 2024. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, I'm going to go off script here for a second to just pick up on what Nancy was just talking about.
What are
You
you
were saying, oh, cool, people are landing on the moon. I'm very focused on Mars right now because of Away.
I'm so glad because we really haven't had a chance to kind of follow up on this. We talked with the creator, writer, the force behind Away, which is on Netflix. Everybody, if you're sitting at home, I binge watched. I have 2 more episodes to go. My husband got ahead of me and watched the whole thing. He's like, you're gonna like this.
Yeah.
But I actually, after we talked to them, I'm like, hey, honey, have you watched, there's this series and blah 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 blah. And he's like, oh yeah, I watched the whole thing. It was really good.
Oh, he had already watched it.
After we had the guest on, I said to him,
we should do this together. And he's like, yeah, awkward.
Done. But he's been really sweet as I've watched. He has watched with me.
Oh, that's good.
Playing solitaire or something else, or reading
fine.
news at the same time, but so that we could watch together. I love it.
It's really good. It's really good. The production values are terrific. Hilary Swank, fantastic. Josh Charles, really great. I was told, I learned something last night about the show, which I did not know. I am going to put this out. I haven't Googled it to confirm it, but I was told by a good friend. The daughter, Jason Bateman's daughter.
Oh, is on it? Is in it?
Yeah. Is the daughter.
Oh, is the daughter.
Is the daughter. Yeah.
Really?
Yeah.
Oh,
I'm going to confirm that in the break, but I believe that to be true. And it's really a terrific show. It's 10 episodes. I don't know if it's been renewed yet.
I don't think so.
But it's highly likely it will be because I think the numbers have been pretty good.
So Google Jason Bateman's daughter Away, and I get, see Jason Bateman's daughter sweetly crash his on-camera thing or something.
That's not good.
Yes.
Speaking of Jason Bateman,
She's
just
little.
we totally just went rogue on this segment. But new podcast for you, Factless, Jason Bateman, Sean Hayes, Will Arnett, fantastic. Must listen.
Really? Factless?
It's called Smartless.
Oh,
Smartless. Excuse me. Smartless. Yeah,
Smartless.
really good.
Oh, okay.
Check it
Podcast.
out.
All right, folks. So we went a little rogue. We'll get back on track.
We'll pull
I
it back.
promise. Sorry, Ari.